So, I would like to welcome everybody, and even more people on live broadcasting. We will start the seminar. This is the second part, when Nenad will be presenting. First, he will talk about himself, a little bit about the agenda, what he's gonna present today. And we have a very special question, one for the broadcasting people who's watching online this seminar. They can send all the questions, all the comments on an email that is presented on the broadcasting website. And I will try to personally reply and answer those questions. And second of all, for you guys who are sitting here, if you have any questions, any comments, please put it down on a piece of paper, and we will have a question and answer part at the last half an hour of the day. Just because we have people watching on broadcasting, probably I will repeat your question in English, so actually people will know what Nenad will answering to. So please welcome Nenad Kerkez, and I wish you fun for today.
So, good day everyone. I'm very glad to be a part of Budapest seminar here in Hungary. Actually, this is not my first time in Hungary, but this is the first time that I meet up here with you. So, I'm glad that you came with in this number. So, it's very good to see such an audience. Today, we will talk about proper money management, and I will show you 3 different strategies for trading that are based, actually, those are my strategies that I have developed over the years, and those strategies are based on both scalping, intraday, and swing trading. But before that, we need to cover the most important part of all sections in trading, and that is money management. So don't forget that this is the single most important part of your trading. It's not about the systems. I don't know what you know so far about Forex trading and who else you listened to before me, but the real truth is this is the Forex truth, Forex money management, and it needs to be incorporated also in your system. But this is the most important part. So before we begin, our standard risk disclaimer, explain that online educational materials are developed by Admiral Markets Estonia for a global audience. So this is my personal opinion only, and this is not a part of the UK website, but the globally.com website. For all information, you can contact admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Now, who I am? That is the question. Maybe you have heard of me, maybe you don't know who I am. The first thing, I've been a professional trader since 2009, and my nickname is Tarantula. So it has a history in it, so maybe I can explain later why I get that nickname. And I get that nickname on Forex Factory. Forex Factory is one of the most popular, maybe the most popular websites in the world for Forex, including Forex Street, investing, but Forex Factory is where all traders usually go when they try to find system, when they try to find that holy grail, right? So in the year of 2010, I actively started to post on Forex Factory. I was involved in euro-dollar trade, and actually I was giving a lot of signals during that time, and people start noticing me. And maybe after a year, I became one of the most influential members of Forex Factory. The thing is that my trademark and what I do with Forex trading and analysis is that I always post pre-fact analysis, pre-fact and real-time analysis. And that means if you read my analysis, you will always see what can happen and where you can maybe place your trades. So the difference between my analysis and the analysis of other people is that actually I use POC zones, and those zones are where you can place your trades if you read between the lines. But of course, you can read it on Admiral Markets global website under technical analysis. You can actually see my, I can show it later, where is my section. And all my charts have a signature on it, analysis by Tarantula. I also post on Forex Factory, and both me and Admiral Markets were nominated for Best Speaker and Analysis nomination in the year of 2015. Forex3.com is, as I said, one of the most influential websites in the world, and they always publish my analysis and the articles that I wrote exclusively for Admiral Markets. Also, my analysis goes to different websites such as Forex Empire, Forex Street, DFID, that is Czech website, investing.com, and so on. So this is actually one of my pictures. This is where I do the analysis. You can see it also on Forex Street. This is Forex Factory. It shows that I was the sixth from the top of 300,000 traders back in days. Actually, they removed the counter, and I had like 4 million views in 2 years on Forex Factory Spiders then. This is the nomination for Forex Street Best Awards. We didn't get the award. We were nominated. But the thing is that some people who were also in jury here in Forex Street, they got the awards. So no problem for us. It's good that we were noticed and that we were amongst the very influential both people and companies on the world. Because Forex Street is also a global website, and there is a lot of people here who also post the analysis and their own opinions. So that was in short about me. Actually, all information, my webinars that I do with Admiral Markets, you can visit on global website, and you can listen to my webinars. They are all in English, but it doesn't matter, guys, if you don't know English that well. It's very easy to see buy, sell, right? I usually make you can buy here, you can sell here, and those are actually, that is my session recap webinar. That is always at the same time each Monday, 6 p.m., our local time. So it's also my local time, it's also your time, and it's 6 p.m. every single Monday. So you will see if you come, and I hope that we will make pips together, because I am really one of the happiest person when I see that people are making money with my analysis. Because, guys, I'm not a salesman. I'm not a marketeer. I actually love this job. And this is who I am. This is my nature. And I have chosen to be with Admiral Markets because I wanted to trade also with brokers who have such great things to offer. And we will, maybe not this time, but in one of our next seminars, I will show you what I actually also use for trading, the tools that are exclusive to Admiral Markets, and that is the part of Supreme Edition. That is really the core of any single trading plan. I don't need to mention regulations, because we all know that we always want to trade with regulated brokers, because our money should be safe. If you trade with brokers who are not regulated, that can be a problem. And back in my days of trading, I had bad experience with other brokers who were not regulated. But we will not talk about it now. You need to know that you are in safe hands. So I'm here to help you, and I'm a trader as you. So what we will talk about is Maslow hierarchy of needs. That is very important part. Then we will talk about money management. I will show you how I do my money management. It doesn't need that you need to adopt it. But if you do, I think that you will be on the safe side of markets. Because trading is not about how much you are willing to win. Trading is about how much you are willing to lose. Think about it. Because you always want to have your risk. If you go out of your risk, then probably you didn't want that. You don't want to lose 30% of your account in a single trade, right? So that is, trading is about how much you want to risk. Now, trading can be gambling. We know about it. I'm also one of the founders of gambling forums. It's gamblingforums.com. And people who actually gamble can have more chance to win in Forex market than in casino. Because when you start to trade in Forex, you have 50-50% to win, right? 50-50, it's half. You can win, you can lose. But when you add things such as probabilities with your trading system, with your trading psychology, with indicators, with price action, your chance can be as high as 70-30 in your favor. So you can win like 70% of the time. Now, even if you win 70% of the time, you still can lose money. And why? Because your money management is bad. You can kill all of your profits with one single trade that is over-leveraged. So that is why money management is of utmost importance. It's of your interest that you stay in this market in the long run. Because Forex is not a sprint, it's a marathon. And you are the long distance runner. You are not a short sprinter that you want to sprint out like Usain Bolt, ride 100 meters and you are tired. No, you want to go like 40 kilometers run. And that is what Forex market is about. And the only thing that you can achieve is by proper money management. And I can tell you guys, even if you trade with 30% of success, you still can win with your trades. And our colleagues from Croatia, from Zagreb, Mr. Josip, has his own strategy and he wins like 40% of the time, but his account is 100% up. It's different than mine. I will show you later my statements, whatever. I don't win 40, I maybe win more, but his statement is more than my long-term statement. My long-term statement is like 50%. But still we are positive. And that is what the most important thing is. So, what is Maslow hierarchy of needs? We will talk about it, but here, this is what you need to know. Successful trading. Now, please, guys, mark this slide and try to think all the time about it. Profitable trading strategy, risk management, trading psychology. That is what your success in Forex trading is based on. This is so-called tripod of successful money management. And if one leg falls, everything will fall apart. So you need to think about this, and especially about this. 3 tasks for you, for every one of you. Primary task, not to lose a capital and stay on the flow for many years. Gradually multiply your equity figures and earn profits. Now, problem with most traders, why you lose money? There is nothing special, guys, in trading. You need to know there is no holy grail. Forget about just have a good system and trade. It's not possible. There are literally tens of thousands of systems out there. And if you start to jump from a system to a system, it's not good. Because in order to have a system that is fully developed, that system needs to have risk rules. It needs to have how you actually manage your trades, how you manage during your trades, then which are the best time to trade the system, then are you a gambler or a professional trader? Everything needs to be in the set of rules for that system. So we are not talking about systems, we are talking about methods, right? And this is the problem. The third task is usually set for the first place. So most of you say, I want to earn profits. If you go with that logic, I want to earn profits, you will lose. I know that you will lose, because that is not about Forex trading. This is the primary task, not to lose a capital and gradually grow your account. Because if you see that one's account is going up like this, that's not good. Something is wrong. You need to have both ups and downs. So your account should show both ups and downs on your curve. That is called a trend. So your account should also be in uptrend like this, not single line. That something is not okay. So success comes down to proper risk management. Now, Maslow pyramid of needs, and generally this pyramid is showing you what you need to achieve in order to be at the top of this pyramid. So we usually, when we start to trade, we usually start from the 4th place. It's green, so it says self-esteem. We have confidence. We have desire for achievement. We respect other people. That's great. But the thing is, that part cannot be accomplished without accomplishing all previous flaws. So, people who unfortunately don't have the money to live properly, they need to satisfy the first psychological need, that is actually by breathing, by having a shelter, by having a food, right? So they are not able to trade. Unfortunately, that is the world, so not everyone is able to trade. They simply don't have basic needs. But next step is safety. When they achieve the first floor, when they fulfill it, they feel safe. So actually then they develop the third part of the pyramid, that is friendship, family, sense of connection. That is when we have usually traders. Traders usually come from this part of the pyramid, love and belonging. And they strive to be at the top of the pyramid. So all successful traders who have been successful in trading, not just Forex, maybe equity trading, stock trading, they have fulfilled the fifth need, and that is actually self-actualization. Without it, without the fifth need, you will still be in hang of balance. But when you achieve this, you will know that you are on a safe path to become a fully developed, maybe full-time trader. So that is what you should definitely strive to achieve. And these are your nemesis. This is your worst nightmare. Okay? Your worst nightmare is so-called 4 horsemen of Forex trading. Hope, fear, greed, and regret. This, if you ever see that one of the horsemen is coming to haunt you, you know that something is not good. You need to change something. So this is the worst enemy of all traders. And this is what we all have been through, guys. I'm honest with you. I've been there. When I started to trade, I was thinking, all I want to do is make money. That was my first attempt in Forex trading. And I was wrong. And I said also at the beginning, if you start to think about it, that Forex is a simple one night win, you're not traders. There is just luck, nothing more than that. But greed, that is your enemy, guys. It does have to do with your way of thinking. How many of you probably have over-leveraged their positions? Probably you were thinking, if this position is lost, I will make up for another and I will double my leverage for that. So instead of sticking to your plan, you actually over-leverage your position and suddenly you see yourself like 20% in loss. Well, that is your psychology. It's not your trading system. And probably you didn't have that in your trading plan. If you define that your plan is like 5% of risk every single day, not more than that, then you should stick to it. But when you actually over-leverage, that is why you're greedy. You don't want to accept losses. Right? So, again, money management. If you don't want to accept a loss, then, well, even gamblers accept their losses, guys. Think, is Forex trading or any other way of trading for you? You need to know that losses are possible. And losses are normal. Totally normal part of trading. But you should keep it under control. So greed and fear can have a big impact even on experienced traders. So you might ask me, Nenad, are you bored with your trading? Because if you stick to 1 or 2% of risk or 3% of risk, it will become boring, right? You can always think about being bored and making money and making pips. But let's say that if you make 30-40% of your account, you can allow yourself to risk maybe 5% in one trade, not more than that. And if you do that, you will still be in the profit, maybe more, maybe less. You will be like 35% or 45%, but you won't be bored. So there is solution for everything. You can try when you get experience in trading. to get a little bit more leverage, to add it up. But that is, again, up to you, how you feel. Are you ready for additional level of challenge? One of my friends, who is actually a professional and full-time equity trader from Australia, he was always saying to me, when I have my rule, when I respect my rules, that I will trade as I have planned, well, I am always positive. But as soon as I cross that line, my emotions get in and I start to lose. So guys, even greed and fear, especially fear of losing, can have the impact on even most experienced traders. But the difference between them and you is that you maybe didn't know about this, or maybe you did know, but you didn't think. Because every single person who will come here, they will talk about their systems, only systems. This is how I make money, this is where to buy, to draw a trend line. No, that is not the truth in Forex market. Probably you won't be here if every one of you is millionaires now, right? So the real truth is stick to this, what I'm telling you now. And first of all, you will be safe. You won't be sweating, you won't bite your nails, you won't feel bad. Do you want to feel bad? Then okay, risk 30% of your account in one trade and let's see if you will win. If you win, you will be happy. But next time, maybe Mr. Draghi will speak and suddenly the price will go down and you will lose 70, 60% of your account. You will not make it up. It will take time to make it up. Else, you would be gambling again. So think about it. Greed will create a fog on your perception. And if you experience that fog in your mind, just think about this seminar, think about what I'm saying now, and say, okay, now I will calm down, I will step away from my trading screen, and I will get here when I'm ready. There is always next day, guys. Not each day is for trading. You need to know that. You know what I'm saying usually. Sometimes not having a position in the market equals to having a profitable position. So sometimes when you don't have anything open, not a position, that means you're in profit. Because some things are just out of control. You cannot control equities. Do you know that equities move with yen pairs? So when something is good, let's say when DAX is going up, you will see that Australian dollar, yen, pound yen, dollar yen, they're also going up. Forget about your systems, because if your system tells it to short it and equities are going up, you will lose. So you need to know intermarket connections. Maybe that will be also the subject of our future webinars. But you know, now I'm giving you the whole picture, not just one tree. So equities are moving yen pairs. Dollar is safe haven. So what should we trade? We should trade everything that is on our disposal by using all the knowledge that we can gain from me and from other people who are also educating you how to trade properly. But this is not what others do, and I know that. I know because I've been there. I've been through 5 different teachers when I started to trade Forex market. 5 different programs. I paid for it very expensively. I learned some things. Well, I learned, I need to be honest, I'm a self-taught person. So I read a lot of books from Steve Nissen, from people who actually wrote about candlesticks. But I didn't learn much on those courses except for how we can use trend lines, how we can use moving average, how we can trade with pivot points. Everything was the same, but presented on different way. I didn't know about this. So this is what I have experienced. I experienced losses, so I can talk about it. And I also experienced huge wins. And I have identified the biggest problem in trading. So those are those 4 horsemen of apocalypse and your emotions. Now this is important. Pay attention to this. Fear of losing. Fear that we will lose the money by trading. If we don't trade, then we don't have the opportunity to make the profit. That's simply wrong. Because fear of losing is your psychology fear that is not related to reality. Because market will be tomorrow. Forex market is there. Guys, if you try to run after your shadow, you will never catch it. So you need to stand still like this and wait for a shadow to appear. That is the same with market. Market will come to you. Don't chase it. Chasing the price will lead to revenge trading, with over-leveraging, and with trades that are not have anything in common with your trading plan and strategy. In this market cycle of emotions, euphoria is the worst. When you are so willing to make money, when you really think that market will give you huge amounts of pips and money in one trade, that is when you will lose. Because euphoria will also fog our minds. You need to start being optimistic. Because watch this scale. This is not what I have come with. This is actually in every single book of marketing. Market cycle of emotions. It is also for traders. When you start being at optimistic level, you will have the will to make money, but that will not be euphoric will. So you will be realistic. You know that there is a possibility. You know that market is behaving according to your analysis, and you will make money. But if you start to be euphoric, that is when fear kicks in. Because if you're so sure about your trade and your trade goes down, you will become feared. And actually what will happen, you know what happens. You don't use a stop loss because you are hoping that the price will reverse and then you will get your trade back, and then eventually you will surrender. It won't happen maybe after one trade, two trades. Maybe it will happen after 2 months, 3 months. But that's not who you are. You can make money. I know, because I'm not the smartest person in the world. Right? I'm not who invented the warm water. I'm just one of traders who knows how to be profitable. And you should be profitable if you follow me. This scale, second one, is actually also the scale that we translated into this one. This is positive spiral support. This is negative spiral resistance. Now, think about this in the form of price action, guys. So imagine that this is the price chart. This is the support and this is the resistance. So think about it. Where should you start to trade? When your emotions are here, near the support. So you are actually optimistic, you are hopeful that your trade will go up. So that is when you start to feel like you will win the trade. But if you lose and start to be sucked into negative spiral, then probably it will be a very, very hard way to actually exit from this. Because guys, swimming in a calm sea that is positive is easy. But if you are sucked into a whirlpool, such as negative spiral resistance, you need to swim very fast, very, very nervous, you need to be a superhuman to get out of it. It's very hard. I know, because whenever we start to lose, actually we start to become sucked into this negative spiral. At least we will be disappointed, right? Disappointment. But problem is when you get angered at market. You should never get any anger on market. Market is not the fault for your bad results. Market is not the one who made you lose the money. It was you. It was your decisions. And probably even that it's not your system. It's just your decisions. Because you didn't follow your plan, you didn't follow your money management, and eventually you start to revenge. You know what revenge trading is. When you lose one position, let's say one lot, and you instantly open a second position with 2 lots. Is that normal? Tell me now, when you think, is it a normal behavior of a trader to lose a position, then open immediately second position, usually in opposite direction? So euro dollar is going up and you have one lot, and suddenly drops down because of some news, whatever, and you just close your long trade and open 2 lots of sell trade. That is revenge trading. That is totally irrational, because that is emotional trading. That is when your emotions kick in and you forget about system, you forget about plan, you forget about everything that I was speaking here today with you. You will just trade emotionally. And if you lose, then what would happen? Totally depressed. You will be extremely stressed, and you need to deposit probably much more money to continue with trading. So it's not your system. It's not your holy grail. That is money management, and that is your emotional trading. When you start to lose, just simply accept the loss, step away, and you will be safe. Now, in order to actually protect our profits, we cannot always say, we will take 30 pips with a trade, or we will take 50 pips with a trade. You need to know that you need to adopt a so-called trade management. So when you're in a trade and you observe the price, you can move your stop loss. We will talk about it later. You can use profit stop. You can use break-even stop. You can use trailing stop. You can use scaling out. So there is a lot of techniques that you can use to secure your profits. But if you simply say, I want this price to come 50 pips to my target, who guarantees you that it will come 50 pips? Guys, trading today is not the same when I was posting on Forex Factory in 2010. And even today, trading is not the same as if it was for like 10 years ago. Markets are much more volatile. There are a lot of institutions, a lot of people who actually trade today. Retail market is huge. Banks, pension funds, hedge funds, investment, companies, money remittance companies, they all move the market. So it's not the same as if you were trading 10 years ago. So what's the point? The point is to adapt to current market conditions. And this is what current market conditions is telling us to do. We can have a good system. That's very important. We need to think about money management, and we need to respect our rules and psychology. So, how to actually balance need and greed? Well, guys, as I say, love and belonging. Be content with your friends. Respect other people who are... There is no good or wrong in Forex market. Some time ago, when there was a company in Belgrade, I will not say the name of the company, they conducted various seminars. And one of my friends came to my house and asked me, she said, Nenad, can I ask you, what do you say, how much I can tell them that I want to make per month? And I said, okay, between 2 and 5%, if you can make per month, constantly, that is huge. Because banks give you 1% per year. And if you can make like 2%, 3% per month, you will earn 3 times more than banks will give you for a year. And then she got into that company's seminar. And when they asked people, like I'm talking with you, what guys, how much you think it's realistic to earn in Forex trading? And everyone said 20%. And my friend said 5%, and they mocked my friend and said, you're crazy. 5% is nothing in Forex market. Well, what happened? Every single person from that webinar, from that seminar, has lost everything. Because they were just simply marketeers who were telling them that they can make 20 profits in order to make them to deposit with their company. That are not real Forex brokers. I really don't like that behavior. And I will always fight to the full strength against brokers and people who tell such lies. That's not the truth, guys. If you can make 1, 2, 3, 5% per month, you are great. And I can tell you that you are great. Believe me. Because after a year, after 6 months, you will be in nice profits. If you trade with low account, that won't be huge money. But that is why you focus on percentage, not on the money, just on percentage. That's the fact. Even if you make 200 out of the 100, that's great. You are great. Because the same logic is applied to actually big accounts. So you need to know how to balance between need and greed. And what I can tell you from my experience, start low. If you don't have much money, don't worry. Don't worry. Try to build the account. So eventually when you make more money, you will start to earn more money. But still, it will be 3%. 3% on $10,000 account is not the same as 3% on $100 account. It's not, because $100, it's only $3, right? 10,000, it's like 300. But what the difference is, that is that percentage. So remember, imagine if you had like 50,000, 100,000 or $1 million, right? You don't even need to use stop loss when you have $1 million account. Open one lot and let it go. You will always be in profit. You cannot lose 1 million with one lot opened, right? So that's the simplest explanation how you cannot lose and you don't need to use stop loss. Have $1 million, open one lot and wait. You will be in profit. You cannot lose that. But, of course, we don't trade with million now, except I traded with, back in days, with UK company. I was institutional trader. We had like 160, 200,000 pounds. So everything is the same. But the only difference is you use bigger lots instead of taking smaller lots. Effectively, when you trade with such big money, you don't use lots. You just print out how much your pip is actually earn you. So it's the same. It's just difference between volume traded. So try to satisfy these three psychological needs. Fifth and fourth thing in the pyramid will come eventually. It will come. But don't rush to be the richest person in the world in just a single month. Don't try that. This is slow run. Remember what I said. Forex is fast-paced marathon and reduce the size of position. So if you want to make a good result in Forex market, just try this when you get home. Instead of opening, let's say, 3% of risk per trade, try to do it with 0.5% per trade. And tell me, maybe after a month or two, how is it going? I'm sure that you will be less stressed, because no one wants to be sick, right? Stress brings illness. You know that. The worst illness, it can bring stress. So Forex trading should not be stressful for you guys. People ask me, how come you made 3,000 euros out of 300 euros? I said, because I don't care about 300 euros. That's great, but if I had 30,000, then maybe I would think differently, guys. So try, that is the risk. That is everything about risk. Just simply calm down, try to reduce your position, and if you're still losing, you will see it won't have impact on your psychology. That is, you need to change the system probably, so you won't lose much. So the time is to change the system. When you have the system, good system, and you use good psychology and money management, you will earn money. You will earn pips. You will be successful. And do not trade every day. Forget about trading every single day. Sometimes you will need to open intraday position. Sometimes you will need to open scalping position. But not each day is for each strategy. Because sometimes price doesn't move. If you follow Fed announcement, I made an analysis on Admiral Markets website about pre-DEX movement. And what happened, I said, guys, wait for Fed. There are 4 possible scenarios. And when it happens, be patient and trade one of these scenarios. And that happened. Fed was dovish for this last statement. And actually what happened, DEX spiked up. And also yen pairs went up because equities are follow yen. It was like a no-brainer trading for people who were patient, who waited for that. People who tried to trade before the Fed, they probably had some losses. Or maybe they made scalps, but they didn't have losses. Because those news will impact your trading result over the day. So you need to know when to trade, when not to trade, and when to stop trading for the day. Try automated trading. Do you have an expert advisor? Do you have some sort of, not the expert advisor like arbitrage trading? You need to know that that is forbidden. And if you use arbitrage trading, and broker might stop your account because that is not allowed. That is cheating in Forex market. So high frequency trading, arbitrage trading is not allowed. It's also, you need to read a statement with your broker, and definitely it's not allowed. So there are other automated strategies that can bring you money. But also you need to know that they cannot run 24 hours on your platform. Because when some news get in, some important announcements, rumors, or whatever, it kicks in, they will just print out losses. Because they're not human factor. Human factor is the most decisive factor in trading. And robots are simply to follow the rules. And we are humans, we are not robots. So still, if you use robots, you need to know when to put them on your charts and when to close it. Okay, so that is how you can balance between need and greed. Now, let me talk about leverage a little bit. This is important. Leverage means that brokers provide you with more money than the balance in your account. So that is effectively what leverage is. So the money you put for a trade is so-called margin. And if you want to, let's say, open an account with 1 to 100 leverage, you need to deposit usually with $1,000 because you trader guaranteed with $1,000. Now you probably need that, but I will show you the formula for risk. That is why I'm showing you these slides. So brokers will provide you with more money, and leverage works by establishing a rate you can use for every euro or dollar in your account. So the money you put for a trade is actual money you risk. It's called margin, right? So we use leverage to increase our profit potential. But it's not only that. With increasing the leverage, losses can occur too. So you need to keep that in balance. And that is why you need to know which leverage you use for the trade in order to have a good risk. So this is how you actually account for effective leverage. This is how you can also do it yourself. Total position size divided by account equity is the effective leverage. So the example, we have an equity of 10,000 euros. Total position size is 50,000. Okay, so the effective leverage is 1 to 5. So this is it. For 1 to 100 leverage, we need $1,000. And if you make 100 pips of standard lot, you would make a profit of $1,000. Because every dollar in contract that you made is $1 cent. Because we traders guaranteed with $1,000. So if you drop down, you will be margin called. You know margin call. So if you make a loss and value of contract drops to 99,000, the deal is off. So you will be margin called. So you need to know about these things before, guys, you start trading. You cannot just enter a random position and because your system told you to go short or long. It doesn't work that way. So this is my recommendation. So I recommend no more than 5 to 1 leverage. For example, if the account balance is $5,000, don't trade with more than 2,500 per position. And that equals 5 mini lots or 0.25 on MT4. Because I think that most of you use MT4 platform, that equals to 0.25 mini lots. So on 5,000 account with 0.25, you can go with 0.5 to 1% per trade. So it doesn't matter if your stop loss is 30 or 100 pips. You will always adjust your stop loss, but your risk should be fixed. Remember now this. So this is, let's say, a proper lot size, but you need to know what is your maximum risk. And then you need to see the stop loss. Stop loss for euro dollar is not the same as for pound yen, because pound yen or pound New Zealand are moving with a much higher range than its euro dollar. So if you trade pound dollar, okay. If you trade pound yen, well, definitely you need to use a bigger stop loss. But your risk should be fixed. So there is no rule for stop loss placement. We can trade with 100 pips of a stop loss and have 1% of risk. Think about this. You can always say, I will risk 100 pips of a stop loss. And if you lose, you will lose 1%. But people don't know about it. They think that 100 pips of a stop loss is like 10% of their loss. No, it's not a fact. The real truth is stop loss is dynamic and risk should be fixed. So, when you have your system, who will teach you the system? If you got some free systems from the internet, that might be the problem. Because those systems were only PDF files. So you don't know what the rule is for pound yen. You don't know that you can trade maybe Swiss yen, or maybe you can trade Australian dollar New Zealand. Or even worse, you don't know if you can trade for which session. Some sessions are good for dollar, some sessions are good for yen, and some sessions are good for New Zealand. Do you really want to trade EuroCAD during Tokyo session? Even if your system tells you to open a position, it's not logical. That is why I say you're humans. And that is the human factor, always. So you cannot trade, I mean, is there a logic to trade CAD during Tokyo session? No, you trade CAD during US session. You trade yen during Tokyo session. New Zealand, Australian dollar, commodity, hard commodity, soft commodity currencies. So this is now Forex education. And you should probably know about this because this is money management webinar. This is not about which pairs you should trade. But if you didn't know about this, that is because no one actually had a proper approach to you as traders. So you need to know when. Did you know that the first 3 hours of each session are the most profitable? Did you know that? So when you open a trade, the chance that you will be profitable is higher if you open it during the first 3 hours of London session, during the first 3 hours of New York session, and eventually during the first 3 hours of Tokyo session. Forget about New Zealand, Wellington. Forget about the price doesn't move during New Zealand session. So major sessions, London, New York, that includes London, New York overlap, and of course, Tokyo session. So then you need to know which pairs you should trade. So again, for Tokyo session, yen pairs, for London session, euro pairs, dollar pairs. There is no logic, guys, to trading something that is not moving or that is in range. And one advice that has not strictly to do with our money management or leverage, follow equities. Equities are a group of indices, okay? And we traders don't call that indices, we mostly refer to equities. DAX during London session, SP 500 during US session, Nikkei or Japanese 225 during Tokyo session. Because yen is affected by carry trades, you will see that most pairs are in perfect correlation with equities, yen pairs. So, Ori yen, pound yen, let's say euro yen also, and dollar yen. So you will see that they move also with equities. If you don't know what correlation is, download the Admiral Markets Supreme Edition, grab the Admiral Markets correlation table, and just see that correlation between equities and yen is high. That is the trick. Now remember this, if you see that there is a positive correlation, and that, let's say, DAX is moving up, and you see that actually pound yen was still not moving up, you know that maybe this is the time to open a long position on pound yen or Australian dollar yen, because if equities are in correlation, and they are at this time and like years ago, you will probably see that pound yen will jump from that level. Think about it. Those are little tricks that can make your day. And think about this. Risk. Always don't forget, stop loss is dynamic. No universal stop loss. Except if you say, I will use that stop. Now, maybe you don't know what that stop is. That stop is what traders say when they don't need to use technical stop, like 30 or 50 pips or 10 pips below last low or last high. They use fixed stop loss of, let's say, 100, 150 pips. But their risk is fixed. So stop loss is 100 pips and their risk is like 1% or 2%. Whatever you think, if you want to give 10% of a risk, then do it. But I say in the long run, it will not be okay. Sometimes it's okay when you make profits. Let's say you make 70, 80% of profit, then you can allow it. But when you're starting to build up your account, don't do that. And this is your risk formula. Stop loss times leverage divided by 100. So we all know mathematics. So whatever the number is in hyphenation, we use that first and then we divide. So if stop loss is 20 pips, let's say in this example, 20 times 5 divided by 100 equals to 1% of risk. That is how you can actually use this risk formula to complement your trading. If you're not ready for this, maybe you should try that on demo account to see how it goes. And if you still experience losses, that losses won't be big, then try to switch your system. Because even if you have 10 straight losses with this formula, you will still be profitable. You can be profitable because if your system is 70% accurate, you will have 77 wins, let's say, out of 10 trades. So if you still lose with this risk, then your system is not good. Switch the system that gives you more probability and stick to this money management. You won't be earning tons of money if you don't have a big account. But you know that even if you have a low account, the same strategy can be applied on bigger accounts. So instead of using 0.1 lot, you will be able to use maybe 2 or 3 lots. And that will be the money, but you will still be risking 1%. And this is what happens to traders who don't respect this, what I'm saying and what I'm talking about. This happens to most of traders. Why? Because of psychology, because of 4 horsemen of apocalypse, because of the people who told them you can make 20% each month, who lied to them, those untrustful brokers who just wanted to take the money out of the pocket. So this is what they never told to you. This is what they will never tell to you guys. First trader, the same thing, using maybe the same strategy. But as I said, it's a human factor. I can have the same strategy as you, but we all will be having different results. So when you ask me, can you provide a statement? Yes, I can. But that statement is my statement. It does not guarantee that you will make the same results. Because there is not just a system. There is a method that has everything that I've been talking about in it. Every single structure has been written in the plan. About my psychology, about respecting trading hours, about which pair to trade, when to not to trade. So, same strategy, different results. It doesn't guarantee. What I can do is teach you how to fish. But you need to fish by yourself. Because every one of you is different. Maybe this gentleman here in front of me will have 10% of win. And maybe the lady down there will have 2% of loss with the same account. So where is that mistake? You need to identify it. It can be a mistake in one of these things that I'm talking about. So the first trader, you see, it opened a position of, let's say, 50-10K lots, but leverage was 50-1. The second trader had a leverage of 5-1. They both had 100 pip of a stop loss. The account size was 10,000. So the first trader lost 50% in one account. And the next trader, the second trader, lost only 5%. Guys, this is 500 on 10,000. It's manageable. You can recover it. But watch this first guy. Now this trade has an impact on his psychology. So what will happen? He will probably try to revenge this 5,000 because now, he's so angry and he will try to jump in and get the revenge. But professional sportsmen, if you watch, let's say, some martial arts, you will notice that every best fighter in the world has been is calm, is very calm when he enters the ring. There is a positive stress, but they're all calm, they know what to do, they're waiting the opportunity. This emotional trading is same as boxing or whatever. If you're too emotional, like Tyson when he bit the ear of Holyfield, that was a loss, a complete loss. And now everyone is talking about Tyson who beat Holyfield. Who was the better boxer? Maybe Tyson. But when he boxed with Holyfield, he lost. Because of this, because of his emotions. And that is what you do when you lose. You go up and you just jump in a trade, opening 2, 3, 5 lots just to cover up for the loss. And that's the problem. Never ever do that. Do as this second guy. It doesn't matter 500 euros. That will be manageable. This will be complete failure. I think that this will be a possible margin call. Because next trade, if it's something similar to this, it will be margin called. He won't have any money to hold a margin for him. He will need to deposit. And what if he loses the money? What then? Then he will lose $10,000 in 2 days. It happens. And it happens also to professional traders. Because they stepped away from this, what I'm talking about now, hold this seminar. They stepped away from their trading plan. Don't allow that to happen. This is how to trade smaller accounts, guys. So this is the proper way to trade. Watch this. Risk 2% per trade or risk 10% per trade. Even when I say lower your risk, try to go with 0.5 for 1%. You will be even more happier. Watch this table. Again, 2 traders. The first trader now maybe is smarter. He's not that crazy anymore to risk that amount of money. I mean, maybe he's a gambler, so it's okay for him. But let's say that he's not a gambler. He's a normal person, normal trader, not a gambler. So what can happen? Only 17% of losses after 10 losses straight. And the other trader who actually changed his attitude, now he lost much more because he risked 10% of total account. He might be bored. He said, okay, I won't be trading with 1%, Nenad, it's too boring. I want to go with a little bit higher risk. And what happened? Look, 10% of risk per account, and his account is almost over. The first guy, who is now smarter trader, only lost 17% because he had 10, literally 10 losses in a row. So probably maybe he will change the strategy, maybe he will stick to the strategy, but only 17%, that's nothing. You can manage this. But this 60%, it's very hard. So try to risk 0.5 to 1% per trade. If the stop loss is 20 pips, we use the following formula. Stop loss times leverage divided by 100%. So only 1% of risk, stick to that. If it doesn't matter, again, if your stop loss is dynamic or fixed, you can change it, making your risk fixed, your stop loss fixed, but your risk is always 1 or 2% per trade or 0.5. Go with 10% of risk and wait what will happen. Try, but please try that on demo account. Don't try that live. And now equity curves. Before we move on to system that I will be presenting you, that will be the free system for you. You will see actually the equity curve. This is one of my accounts. And you can see a good equity curve. I mean, everything is my personal account. And this was not good. This is not good. The top right corner is one of my accounts that I can say it's not good. And I will explain why. So the first equity curve on this account is good. So it should show a positive trend. So when I say it should go up, it should always have some ups and downs, but generally it needs to have an upward swing, like this one. This one is also account, but you see it's a long-term account. So this account is like 2 years old, and you can see that there were both ups and downs. Again, there is a trend. And you can make a trend line here, like this. So you can see that it's the same as price action. If you put it on a line chart, your price action would look something similar to this. So you see, the equity curve is good. And I'm happy with this. It's okay. Because it's 2 year account. So you know, it's not a 1 or 2 day account. It takes It took some time to build it up. And this one is not that good. Because you see, there was a good, well, that was like ranging, then it dropped, then it started to go up, and then it suddenly spiked down. Why? Because sometimes you don't have the time maybe to manage your trade. And I have identified the problem. Here, I actually forgot about the trade. I put a trade, and I forgot to put my stop loss. Because I was very busy, I had like 5 different accounts to manage. If I make a trade, I have 5 different accounts. Every account is for different purpose. So here, that was a loss. And you see, now I need some time just to focus on that account and actually to try to build it up to a positive spiral. I won't be spilling the money from this account or this to this. No, that's bad. So I will be trying to get it back. But I need to be, I need to use my own money management with low risk and try to slowly build it up. So the problem was here, I didn't use a stop loss, and there was some news that hit me hard. So, maybe you will use the same system, whatever, but the thing is, you use it maybe different way than I do. So that is the human factor. No one, guys, can guarantee you results. So if you want to buy a system, whatever, no one can tell you will make 120% on account. Or you will make in 2 years like 50%, such as this account. Or you will make a loss. No one can tell you that. We are all different. I trade one way and I use different, maybe totally different money management than all of you. So the results will be different. There is no automated trading. I really hate when people start asking me, now when you show my statement, you guarantee that I will make these results. No, I don't guarantee. Because all of the things I've been talking today with you, that's you who will actually take signals. And that is you who will decide when or is this a good time to take a trade or which pair to trade during the session. And that is you who will use 1% or 10%. If I used much higher risk for the first account, I would probably be here like 500%. But who knows, maybe I would be in a huge loss, guys. Everything is mixed. Psychology, money management system. We get mixed feelings when we trade. So it's not that simple. Forget about people who will tell you, use this system and you will make 1,000%. That's not possible. That's really not possible. Okay? Unless you have a lady luck smiling upon you and you have a streak of good wins. Or maybe you have an insider information, which we usually don't have, that maybe Mr. Draghi will tank down the euro on next ECB meeting. I mean, if you have the insider information, again, it's not trading. It's like, it's like insider information. Okay? So how to actually trade smaller accounts? This is, guys, the table how you can trade a smaller account. So if you have 3% of risk, you see, depending on your stop loss, 50, you can make it your own table. I just use this as an example. Even with 3% of stop loss, when you just lower down your risk, you will have more chance to stay in safe zone. Remember, if you ever cross 5% of risk threshold, you will be in danger zone. If you want to make huge amounts of money in trade, you need to say, okay, but I will risk. If you want to make 100%, you need to risk 100%. But if you go gradually, multiplying your figures, this is the way to go. Just an example, you can calculate it also by yourself. So even with 3% of maximum risk, when you, on $10,000 account, if you use 0.5 or 0.5 loss with 15 pips stop loss scalping, right? Then you can have 4 to 6 trades. But if you use full lot or even more than that, you will have only one trade. If it goes bad, you are already kicked out of the market. You will be in danger zone. So that is the way. One more thing before actual system is drawdown. I will be fast with this because I don't know if you know about this. This is also important for money management. Reduction of capital, that is called drawdown. And you have actually 3 drawdowns that are displayed in MT4 or other or other websites such as MyFix Book, where you can track your results. So you have relative drawdown, absolute drawdown, and maximal drawdown. Okay, so that is actually reduction of capital. Now, absolute drawdown is the difference between the initial deposit and the smallest value of the equity. So how much below the initial deposit level the initial deposit level the participant's equity has ever fallen. So that is absolute drawdown. How much you lost and your equity has fallen. And absolute drawdown equals to initial deposit minus minimal balance. So that is the formula for absolute drawdown. Maximal drawdown is the maximal difference between maximums and subsequent minimum of your equity. Maximal drawdown, this is the formula for maximal drawdown. So you have your MT4, you can go with account statements, but you can also calculate it by yourself. This is the formula. And relative drawdown is a ratio between maximal drawdown and the value of corresponding local maximum of the equity. And that coefficient will show losses experienced by, let's say, expert advisors. Usually they make those relative drawdown. So you can also snapshot this. And this is how MT4 calculates a drawdown. So let's say that the account balance at start is $100. A trade is open and then goes into floating profit of $10. So this makes the equity high of $110, right? The trade goes in the negative territory on minus $20. So that makes the equity low. 100 minus 20 is actually 80. So relative drawdown is 110 minus 80 divided by 110 times 100. You can write this down. I mean, this is simple calculation, and that is a relative drawdown. Usually expert advisors do that, but you can do it if you want to calculate it by yourself. That is a relative drawdown, and that is how MT4 calculates a relative drawdown. And this is, before we move on, final slide. I think so. First 3 hours, as I said, of each session are most profitable. First 3 hours during London, New York, and Tokyo. Don't trade each day. If you want to trade more, then use different strategies. You need to have a strategy for trend. You need to have the strategy for counter trend. You need to have scalping and breakout strategy. Because sometimes the day will be ranging. So you need to use maybe a scalping strategy. If the day is trending, you need to use a trend strategy. If you see that the pairs are going too high and they are close to their highs or lows, then use counter trend strategy. And if you see that some important news are coming in, then use breakout strategies. You cannot simply rely on one strategy and trade everything that comes with markets. It's not like that. And as I promised, this is, of course, double MACD strategy or MACD for part-time traders. You will be able to use this. You just need to sign up with Admiral Markets Hungary, of course, and just send the info to Zalan, and he will give you the indicators for this. Actually, this is really a good scalping strategy. You can try to trade it. You can try to use it to see how it goes with you. I had some traders that actually made like 10% with this per month. But as I say, everything is different. Try to see if it fits for you, your own way of trading. And this is what indicators we use for the strategy. So we can say here that we have a time frame of 5 minutes. So that is the only time frame to trade the strategy. You need to have exponential moving average, EMA, of 34 and 55. Stochastics 813 and stochastics 1313 that are overlaid on the chart. So they should be put on the same chart. MACD 2 line 34, 89, 34. And use either my pivot point indicator that I will send to Zalan so you can actually get it. It's free for you. Or Admiral Markets Supreme Edition hourly pivot point. That is also very, very good. So long entries are made when blue EMA goes above red EMA, and MACD blue line is above red line. I will show that also. We'll have some examples. But I will probably need to use my computer actually to show you on the real chart. Then stochastic below 20, and it's pointing upward. And target is hourly pivot point. What is hourly pivot point? Hourly pivot point is actually pivot point that changes during each hour. So it's not like daily pivot points that are fixed for the same day. They will change each hour because you're using 5 minutes. You don't go with daily pivots. When you're trading on 5 minutes, you should be using hourly pivot points, not daily pivot points for your targets. And it's very simple. I mean, it's like a no-brainer trading. But of course, if you ask me, Nenad, how come that if that is so simple, why don't you make expert advisor? Because of all things that I've been telling to you today, of all these things, we cannot make the expert advisor and expect the constant stream of positive results because there will be news, there will be psychology, there will be human factor decisions, there will be some maybe events that bank holidays that don't move the price at all. So, you know, when banks are on holidays, there is no one to defend support and resistance levels. So this doesn't mean anything, hourly pivot points. You need to incorporate that into your mind. We trade euro dollar or pound yen or whatever, we can trade it during London session. But during Asia session, forget about, I don't trade euro dollar really during Asia session. If I ever make a trade because I need to sleep, I cannot trade during Asia, I will go with yen pairs or New Zealand or Australian dollar. But mostly I will go with yen. So again, there is much more than just a system. But look at the rules here. Blue is above red, and blue line is also above the red MACD, and watch stochastics. 813 or 313, whichever goes first above 20, and this is it. And you use this is my hourly pivot points, and you can use Admiral Markets Supreme Edition pivot point, hourly pivot point. So look at the entry. The price where these vertical lines are, those are the entries. They go by the rules. You see how blue stochastic and red are going about 20. Here, blue is above red. MACD histogram is blue. And watch what happened. And the second example also. Watch what happened. So it doesn't matter if the prices go up or down. So you are not analyst. You are a trader. So you don't care where the price will go. We analysts also need to think where the price will go. But you as trader just simply trade it up or down. Short entries. 55 EMA is above blue EMA. MACD red line above blue line. Stochastic above 80 and pointed downwards. And target is hourly pivot points. So now this is very interesting because you can trade actually entry and is just defined by these simple rules. And MACD defines your overall trend. This is what most technical analysts fail to say. And this is what traders can tell you. Because when analysts make a prediction, except, as I say, I'm a trader too, so I always make different predictions. They will usually focus on higher time frames, right? Because it's easier. It's much easier to place a 4-hour chart and watch where the price might go in some days than it's to go with intraday setups. This is the hardest way to actually trade intraday setups and to make an analysis of intraday setup. Because it is defined by much less, you don't have big margin for an error. And higher time frames have, so that is the difference. And this is simple. MACD, again, is showing you the trend. Red and blue are aligned. Red is above blue, MACD red, and watch the stochastics. That is your entry. Okay, and watch where the price go. When hourly pivot point is hit, you can actually take the profits, or you can actually scale in, scale out. You can actually place your trade to break even. I will explain that also in my second part of the webinar, where I will show you my also 2 strategies that are not free, but you can, of course, get it for a huge discount if you go with Admiral Markets Hungary. You will have a huge discount, and those use also some coded indicators that we have developed ourselves. So we also needed to pay for those indicators. And here you can see, I mean, 2 trades for this system is enough. And this is scalping. Okay, so remember, this is scalping. Next two strategies are not scalping. So this is what you can do. Make 2 or 3 trades per day, and you stop trading. You don't need to make, I don't know, 10 trades, because the system will give you 10 maybe setups. But the best setups are found during the first 3 hours of each session. So when you make a good trade, stop trading for that day. You don't need to be greedy, because that is one of the 4 horsemen of apocalypse. Don't be greedy. And here, very, very, very simple example and very straightforward. Blue above red, red MACD, stochastics are aligned. Here, both of these lines were sitting atop, but when you get experience with this scalping strategy, you will actually identify trend lines and price action, and you will know that this can be also shorted. So that is why price action is very important, not just the system. The system is telling us where to enter. But if we know price action, we can see that this is downtrend. Because also one of the questions that new traders ask is, what is the trend, let's say, on euro-dollar? What trend? Which time frame? Because trend can exist on every time frame. 1 minute time frame has a trend. 5 minute time frame has a trend. 1 hour time frame has a trend. Monthly time frame has a trend. So if you ask me what is the trend on euro-dollar, can you please define the time frame so I can tell you what is the trend? And I see that a lot of people simply are neglecting that, and they say trend on euro-dollar is short. It's not short. I can tell you it's not short. Because now on euro-dollar we have buy the dip scenario currently. And I made the analysis on Admiral Markets a few days ago where I said that 1.1200 can be bought into possibly. Because higher time frames are showing uptrend, lower time frames are showing downtrend. So we just use lower time frames to get like a sling, like a piggyback into the market. That is what you can do with next strategies. But for scalping strategies, just watch the time frame. 5 minutes, it's short. MACD, blue above red, and price is making lower highs and lower lows. So when you see this, you know the trend is actually to the short side. Combine price action knowledge with the system. And now I would like to open the live chart. So if it's possible, sir, if it's possible to open the live chart, I will show you live examples also. Let's see. If it's possible, then, no, live chart, I need MT4. Okay, I don't see it yet. Okay, here. We need just to open the screen. Okay, now MetaTrader 4. Zalan, do you see it here? It's a little bit hard for me to see here, but let's see. No problem. We can, here, excellent. So here, this is this strategy that I've been explaining. And actually, now watch this. This is pound dollar, okay? And this is 5 minute time frame. Was this really hard to trade? Even if you're not experienced that enough, you simply could have made tons of pips just by trading M5 on 2-3 days time frame. I mean, not the time frame here, but let's say last couple of days, you could have made really nice amount of pips. But this is straightforward. And my objective is always to use as simpler as I can systems. But as I say, you cannot make money just by system. You need to know other things. But if you have a good system, your odds and probabilities will be higher. Here the example. Red is above blue. There is a red histogram on MACD. And watch this stochastics. It goes from above 80 to below 80. And that is the short entry. Okay, this one also. So 2 trades. I mean, this one, this is a good example. If you want to trade the system, always try to get the price in between these 2 EMAs, exponential moving averages. So if the price goes here to red or blue and you get a signal, that is much better than if you have a signal here. So this is, even if it was a good signal, a profitable trade. You see here, I wouldn't take this. Because I want candlesticks to be touching or very close to blue or red moving averages. That is the way when you can see a bigger pullback, bigger retracement, and then a drop if the trend is to the short side. So very, very simple to use. And see here, now this is the time when maybe we will have a trend change. So the last signal was here. Here, red, blue, a big pullback even above moving averages, still red MACD, and a signal. So actually, you can trade this, but you need to know when this happens, like here, maybe on Monday, we will see some movement to the upside. Because now there looks like the price is changing. Especially because here we have a low and here we have a high. Now this is a higher low and this could be next candle maybe could print a higher high too. So maybe we will see that 5-minute trend change. But just for the strategy, okay, you're interested to take actually signals from the strategy. This strategy is focused mostly on euro dollar and pound dollar. You can try to trade pound yen on that. You can trade dollar Swissy, so major pairs, but not for other pairs. So it's optimized mostly for euro dollar and pound dollar. Second strategy is that I will show you. You can trade everything that you want, literally, every price. But this one is mostly scalping, and it's optimized for major pairs, being euro dollar, pound dollar, and others, and pound yen too. Still, you will have really a lot of possibilities to trade. Here, we can see some long examples here. Okay, here actually, even if this candle was a bit high, you can see the trade was very profitable. So where you take profit at hourly pivot points, or you can use trailing stop, profit stop, scaling out. That part will be explained in our, of course, next class. Here also you can use other pairs. So let's see, I opened we can use, let's say, pound yen. Okay, pound yen too. Here, when you see that pair really has a strong trend, you know that you can trade that. So use the equities with pound yen. So if you see that DAX is going up, usually pound yen will follow. And here you see a lot of signals. Here the signal, here another signal. But you know what the problem is? This system can really be good for you. So you will trade everything that you see. Don't do that. Because you need to, as I said at the beginning of the webinar, you need to be patient. You don't need to rush and be greedy. Every signal that you should take. No, you should take only 2 or 3 trades and then you're done for the day. You don't want to give your profits back to the market. And respect your trading sessions. Don't forget, pound yen can be traded even during London session. But if you want to trade euro dollar, you don't trade euro dollar at the end of day when only New York is live. Because when London market closes down and New York traders stay, you will probably don't see much price movement. Same is for Tokyo session. You don't trade euro dollar during Tokyo session. I mean, some people might trade it, but that's pointless. I would prefer pound yen and Aussie yen and the New Zealand yen, other pairs to trade during Tokyo. Because yen is completely different than dollar. And don't forget that Tokyo session, Chinese markets have a huge impact on price movements during Tokyo session. Don't forget that Chinese markets make the huge overall volume for Tokyo session. And you will see that reflected in equities. You will see that in Japanese 225 Nikkei index. See? And my friend, as I say, who is a professional equity trader full-time, I learned really a lot of things from him. And I can say that is totally right. Because this is what you trade. Pound yen, euro dollar, you know when. And other pairs simply are not in the question. Forget about euro, let's say New Zealand during US session. No point in that. Wait. Even though if it's moving, chances that it will be stuck in a range and it will go up, down with a big range because that pair is moving fast. So the faster the moving pair, the bigger the range. And euro dollar is not moving very fast. Euro dollar is this is one of the slowest pair to trade at the moment. And in the 2010, everyone traded euro dollar. Everyone. So that was it. I think we are finished. Actually, I placed this, maybe I close this prematurely, but actually, guys, for the questions, you will be able to ask me during the second part of the webinar. For these questions, please write it down, and only after the second part of the webinar, I will be answering. And one more thing, before I finish this part, don't forget that these pairs, like Euro, Polish Zloty, Euro Ruble, Euro SEQ, those pairs are not major pairs. So if you want to trade something with this system, you need to test it beforehand. I was telling you the pairs that I traded, that I tested. So maybe on demo account, you will want to see how Euro, Polish Zloty is working, or Euro Ruble. You need to test it yourself, or GBP Ori. Maybe even you will have better results in trading some of these pairs than with majors. But if you want to stick at the beginning, stick to only, as I said, major pairs and equities, of course, not trading equities, but watching equities and trading yen during Asian session, or trading pound yen during London. But then watch for DAX index. So I hope that now everything is clear. Actually, we are already a little bit over the time. Next part will be about my two strategies. Those are actually swing strategies, and you can work for different time frames. But the thing is that they're a little bit more complicated. So I will speak of them with more detail. So I hope that you enjoyed, and I will talk to you soon. Thank you. Okay, ladies and gentlemen, thanks for your attention. We are here with the second part of the seminar, and I hope that this won't be the last one. I hope that we will also have a great time together here in Budapest, Hungary. So the first part was about, as you can see, as you probably know, money management. Maybe for people who joined up later, I will repeat a summary. We went on money management, on trade management. I explained a little bit about the leverage, about drawdown, about the real Forex truth. And I actually presented you with a strategy that you can trade as a scalping one. Now, I also received a question from a gentleman here in the first row that can I repeat slowly, step-by-step rules for entering the market. I will do that after we are finished with this second part. So then you will be able to ask questions. Mr. Zalan will translate it to me. And then when I answer, he will translate to Hungarian. So we can actually communicate with questions and answers. The first part of the seminar and the system that I presented was actually, it's called Double MACD, and it's free for all who sign up with Admiral Markets and have their real accounts. Of course, because I'm also a trader who trades with Admiral Markets, these two strategies I have developed for my team and traders who also were who purchased systems, but not all of them were from Admiral Markets. So I was thinking about the possibility to give a huge discount for these two strategies because they're more complicated, and I also do live webinar with you. So for whoever purchases it will receive a huge discount. Normal price is 1,490 euros, and discounted price for people who actually open real accounts with Admiral Markets Hungary, with Mr. Zalan, they will receive that for 990 euros. And also I will be on Skype, so you can talk with me, you will have the full support. And all the indicators and templates, because this is something different. This is, I mean, it has money management, trade management, everything is incorporated in systems, but we need live webinars with that. So I will today explain general how these strategies work, how we can make pips with it, how to play stops, and for more detailed information and rules, we will need to have a live webinar with me after you get the system, and actually, if you're interested in it, I hope that you will. We will have live sessions where I will teach you live also to trade that, because we simply don't have the access to real-time charts now. It's Saturday, so the markets are closed, and the rules are different, so we need to go step by step. But let's see why these strategies are called EQ Maray Mat. It's version 2. And EQ Maray Mat Lite. The first rule for EQ Maray Mat is those are strategies that use pivot points and Maray Mat combined. Now, if you don't know who Maray was and what Maray Mat is, I will also talk about this. It's a simple indicator that actually shows you levels. I mean, it's based on levels that can reject the price and that can actually bring the price down. So those are levels that price is likely to react at. So Maray Mat is one of that was one of the famous systems, and now we use Maray Mat octaves or levels to effectively get in the trade. Before we begin, our standard risk disclaimer explaining that all losses can actually come from trading Forex market and CFDs, so there is no guarantee that your account will be in a winning position. You need to accept the losses and accept this disclaimer if you want to further continue with me. So, we will talk about momentum, that is important, which conditions are suitable for momentum measuring, RSI, MACD, and EQ pivot points, how they actually, those pivot points show us momentum. So that is what we'll be covering. And of course, that will include two strategies. The first one will be EQ Maray Mat Normal version 2, and the second one will be AQ Maray Mat Light. And that is, I need to show you on real charts. We will not be using slides for that. So first is presentation about what these indicators are telling us, and the second one will be live charts. So you will be actually able to see how it looks on your templates. Now, why momentum in Forex? Let's say that the best pips I have ever made was when I traded momentum. I'm particularly intraday trader. So in intraday trading, I use either scalping or I use intraday setups. Now, if I use scalping, then usually my targets will be smaller. But those targets will not be like 5 or 10 pips like other systems give you. Usually those targets are like 15 pips or 20 pips because I use the technique that is called scalp swing. And scalp swing is a special way of trade management where you can actually move your profits to a certain degree. So if you are accustomed to systems that gives you only 5 or 10 pips scalpings, it's not the rule. That is the rule also for the first system, because the trade management that you apply is actually called scalp swing. And for these systems, you can actually go with intraday trading and, of course, with swing trading. And swing trading is like trading that can last for 1 to 5 working days. It's not like 1 month or 2 months, but rather 1 to 5 working days. So it's like swing trading. Now, we can say that price frequently lies because sometimes you see that price is going up and down, but momentum always speaks the truth. So when you see that momentum surge has started, you actually want to get in a train that gives you the push to make pips. Why is it important to follow momentum and trend? Because momentum is based on trend, and trend is made by a big shark. So remember, big companies, big traders, institutional traders, pension funds, everyone is a big shark, and you are just a small fish who wants to follow the shark. So if you swim with the shark, you will be behind it and you will actually catch what shark leaves as its remnants. But if you are trying to swim towards the shark, then you might be eaten, right? So it's same in trading. In trading, that's the truth. You swim with the current. If it goes here, you will follow it. But if it goes here, you don't want to go, turn around and go inside it. That's counter-trend trading. But well, there are rules that we can make and we can take a counter-trend trade. But be aware that, at least in my opinion, how I do it, best trades are always trend trades. And for these EQ systems, I recorded videos also, where you can see live trades on live accounts. Those are reserved just for traders who actually purchased EQ pivot points. And you can see that there are live trades, how I do it, what number of pips there is. So it's also free for traders who trade it. So I will at 90% of the time, I'm making trend trades because I want to swim with the fish. Don't forget about Swiss National Bank. Don't forget about all those events that actually killed a lot of accounts. I need to say literally, they put it under the water. And usually those accounts were accounts that had a huge leverage or they didn't use a stop loss. Fortunately for me, I traded with Admiral and I had stop loss totally respected. It was just only 1 pip below where I put it. I lost the trade, but actually it was like 20 pips of a stop loss. So I didn't lose my account because liquidity providers that are with Admiral Markets are very good and we didn't experience any huge losses. Other brokers, unfortunately, had big losses. So we actually, when we swim with the current, we are going with the fish. But if we want to counter that, that is the problem. The only way how can you lose the trade is actually if the fish turns against you. And that happened with Swiss National Bank. Because no one believed that actually they could unpeg euro from Swissy from euro, and that the floor can go down, can break 1.2000. Now it can happen. Now you see, everything can happen. But we need to protect ourselves. When you do momentum trades, you are going with the flow. So you are following the fish. When you are going counter trend trading, then you actually go counter the flow, and you might experience losses. But there is remedy to that. Because same with counter trend, you need to know when to trade it. You cannot just pick random levels and say, this is what I think that the price will go down. If it goes up, it will turn here. Why? Because simply price will not listen to you. It doesn't care what do you think. Price only cares what it was predetermined to be. And those predetermined things comes with actual money that makes the market move. It takes a huge amounts of money, literally millions and millions, to actually move the price by one single pip. So, however I'm a good trader or whatever, I cannot move the market. And you cannot move the market with me too. So we need to be followers, but not followers of retail traders. Not followers like every other retail trader will tell you. Buy a system, trade this system, and you will make money. You actually need to follow big banks. Because big banks make trends. Retail traders follow the banks if they are smart enough. If they are not smart enough, well, maybe they will probably go counter them, and in some big span of time or short span of time, they will start to lose. So you want to be a smart trader and follow the banks. Okay? So, this is the truth. Momentum will tell you, usually, will give you that instant push that will make your price instantly be in profit. Now, problem is when to take profit. Not for entries, for us are not problem. Problem for many traders is where to exit the market. And that can be also measured by something that we combine. So a good system that actually can give you the cues where to enter the market, where to put stop loss, where to take profit, should have one dynamic indicator. It should have pivot point indicator. It should have momentum indicator. For me, MACD and RSI are great. MACD is moving average convergence divergence. That is the short MACD. And it's great for capturing momentum and trend. And now when we turn MACD into OSMA, and that is actually an oscillator of moving average, we will get an interesting indicator that can give us the price momentum. And I have that indicator here myself. It's not a simple OSMA, and it cannot be found on the internet. So we actually coded it to show us higher time frame momentum, and we actually drill down to lower time frames and find entries. So what we do is we are riding higher time frames and we entering on lower time frames. So it's called a piggyback. When you are riding a higher time frame momentum and using the push from higher time frames to actually enter on lower time frames. So that is what AQ Maray math is about. So that is very important. Now, we can use momentum indicators for following methods. Overbought or oversold conditions, chart pattern momentum breakouts, trend following and retracement, and divergence. So everything is based on momentum indicators. RSI, or relative strengthiness, is excellent for giving us, because it's a leading indicator. I know that some traders think that RSI is actually a lagging indicator. It's not. RSI is leading indicator. What it means that it follows the price. So RSI moves as price moves. So that is what RSI is. MACD is a little bit lagging indicator. So it will move with the price, but with a slight delay. That is actually a good combination, because when you have a leading and a lagging indicator, it can give you a good prediction where price might actually spike. So we use momentum indicators also for price action. We can use RSI, and there is a technique on RSI. You can put trend lines and use it as an indicator for trend line breakouts. You can use it for overbought, oversold, and you can use it for divergence. Now, RSI and MACD, or OSMA, I will refer to OSMA as MACD, it also can give you a sign where momentum is losing. It can also give you a breakout of 50 level. Remember now, 50 level on RSI is very important, because when price breaks RSI, when it breaks 50, usually the price is follow. So if RSI is going above 50, price will go also move to the upside. If it goes below 50, price will initially move downside. So 50 on RSI is very important. And of course, overbought and oversold conditions around 70 and 30. But with this EQ Maray systems, we cannot simply say we watch one time frame and we can have everything. No, we drill down, we go with 3 time frames, and we drill down. So we start, let's say, with daily time frame, then we move on to 4-hour time frame, and finally entries are made on 1 hour. I will explain that, but that is how the idea behind these systems actually is. So a lot of these concepts have been written in one of my favorite books for Forex market. It's called Momentum, Direction and Divergence. It is the book by William Blow. So he already explained how MACD can be used as momentum indicator, as divergence indicator. So I read a book and I was studying a little bit of MACD and OSMA indicator. And I have come to the conclusion that when it's combined with different time frames, it can give us the overall look of the market. So that is why we need to combine that in order to make good amount of pips. So MACD is frequently used to identify momentum and retracement. On charts, it will give us very, very valuable information about, and I specifically wrote it in upper case, momentum and retracement. When you see that price is going up on, let's say, 4-hour time frame, you need to wait for a pullback or retracement on 1-hour time frame. And then on, let's say, 15-minute time frame, you will see that trend is getting back and you enter 15-minute time frame. So you combine higher time frame trend, higher time frame momentum to actually drill down and make entries on lower time frames. I know this is maybe different than what you used to, and that is why I always do a free lessons, of course, for people who have purchased EQ pivot points, because they will always have questions, and we can always tune strategies individually. That is a good thing. That is, remember my first part of the seminar. It's not same. Everyone of you can purchase this, but results are not the same. Because some of you maybe prefer to scalp. Some of you maybe want to news trade. Some of you maybe want to go with swing trade. So it needs to be tuned up with every specific person. So I usually find a time and work with people. And now you will ask me why Admiral? Yes, why? Because I'm the trader of Admiral, and Admiral simply brings you the best platform. I never ever experienced something better than the closing price than on Admiral Markets platform. It is definitely the best because it suits and it follows the closing price of New York market. Plus we have other tools that Admiral Markets Supreme Edition offers. And I combine it with my platform. So I have everything that I need. So why would I switch brokers? I mean, I don't need to. Especially because when you make withdrawals, it's super easy to put money into account. So we don't need it. It doesn't have lag. For example, I trade with ECN account. It's a very small spread, like 0.0305. It's perfect for ECU. Because on ECU, you will see that price is following my pivot points. And actually, when you have a low spread, your entries are even better. So it doesn't have like 3, 4, 5. That is mostly for ECN accounts, but of course, other accounts are also suitable. And pound yen, that I really one of my favorite pairs, I need to be honest. Pound yen is it's called the dragon, because it's huge, it's very strong. I made really nice amount of pips during a couple of months on pound yen by using ECU Maray Mat. So we use top-down analysis on MACD to measure momentum. 3 different time frames. ECU Maray Mat Lite version, it uses RSI to measure momentum. So what is the difference between those two systems? The first one is more complex. As I say, it might not be suitable for every type of trader. The second one is based on the same design, but it's more easier. So that is why I try to adapt strategies to every person type. And that is what also my team, who traded with ECU, Chris also, he's more like a longer term trader, but he also used the rules that are for, let's say, swing trades. So, everyone has its own style. Now, what also is important to know, MACD is used as divergence indicator. And it is very good if you use it as divergence. For me, MACD is the best for showing the divergence. The best. But of course, every other oscillator that have histograms can be used for divergence. RSI also. Although it's an indicator that shows you some lines, you can actually see divergence with RSI. And we can use that knowledge to make either trend and counter trend entries. That is what we learn also during ECU, because trend trades can be done also with hidden divergence. Don't forget that there are 4 different types of divergence. There is regular divergence, bullish and bearish, and there is hidden divergence, bullish and bearish. Regular divergence is used for counter trend trades, and hidden divergence is used for trend trades, trend continuation. Those are little tips and tricks that are incorporated into strategy. Those are not the core rules, but one of the knowledge that you can use to make even better entries, more secure. Because don't forget, when you trade, you're adding probabilities to your system. When you start to trade naked, it's 50-50. And then by adding some small indicators, some small additional rules, your system can be 70 to 80, maybe 70, 75 is the best word, accurate in picking up the entries. And that is more than enough to make pips. We need to use MACD with 2 lines. So we are not using standard MACD that is incorporated into our MT4. For that, we have coded that indicator. It's called Elite Currency ACS MACD, and it has an OSMA in it, so it's a little bit different. This is standard MACD indicator, MACD 2 line, and it's okay. But we have modified this to actually look a little bit different. I will show you that. This is the very important part of our ECU Maray Mat. So, when you see that blue line is crossing 0 line, we say it's bullish momentum. Okay, this is important. Blue line crossing 0 line is bullish momentum. When blue line is crossing 0 line, it's called bearish momentum. Okay? Now, when both blue and red are above 0 line, we say we have trend and momentum. So we both have trend and momentum, not just trend or just momentum. And simple is with two lines, blue and red below zero line. When blue and red are below zero line, we have both bearish trend and momentum. Now, this is how we can identify retracement. Retracement in uptrend is when both blue and red are above zero line, but blue line crosses below red. So this is retracement in uptrend. Okay? Watch this. This is important concept. And here, blue line crosses red, okay, while still below zero line. So that is retracement in downtrend. Why do you need retracement? Because you want to sell higher and you want to buy lower. The core knowledge of trend trading is to buy lower and sell higher. That is exactly the truth in real life. If you have a car, let's say, and you want to sell it, you will go to try to sell it for a better price. So if your car worth is, let's say, 10,000 euros, why would you give your car for 8,000 if you can sell it maybe for 10,200 maybe, who knows? So you always want to get a better price. Same is in Forex market. Why would you sell euro dollar if it's close to support? You don't do that. You actually never sell support or never buy resistance unless you want to go with breakout trading concepts. But still, even if you go with breakout, you need to respect rules. So rules are, with EQ, we buy low and we sell high. That is the core principle. And everything is based on that. How we do it? It's actually defined with these indicators. And then when I am over with indicators, I will go to live chart and show you how it looks on live chart. Top-down analysis sequence is used for intraday trading, but it can also be used for swing trading. Okay? For news trading, we use 15 minutes, 5 minutes, 1 minute. For swing trading, we use daily, 4 hour, 1 hour. That is for intraday. And for swing trading, we use monthly, weekly, daily. So it will cover every single trader. If you want to be a longer term trader, then you need to watch monthly charts. But don't expect fast profits. I'm more inclined to this too. So I'm more inclined to news trade with 15-5-1, and I can trade, and I usually trade with daily 4 hour, 1 hour. So basically what you do is you drill down to lower time frames to find better entries. And you can pick from different strategies in a single strategy. So you can scalp, you can intraday, you can make news trading. So everything is incorporated into a single method. Now, why will we use RSI for EQ Maray Met Light? RSI candles are specifically designed for trend trading. So for second part of system, that is it's EQ Maray Met Light, we will use RSI candles, not normal Japanese candles. Because as I said, when RSI is above 50, momentum is considered up. Below 50 is down momentum. And RSI 50 is actually our benchmark. That is why we use RSI on EQ Maray Met Light. For EQ Maray Met first version, it's EQ Maray Met V2, we use normal candlesticks. But for light version, simply there were some traders who purchased the system and they asked me, these rules sound maybe a little bit complicated for me. Can you simplify it? So I can do everything because this is what I have created. I did it, actually. It took me like 2 months to simplify the system. And you can actually, when you purchase system, you will have a live class with me and I will explain everything. But you can use both, one and you can use the second one. There won't be conflicting signals because the second one is simply the more simple version for traders who don't want to analyze every single bit of price. who is Mr. Maray? Why do we use Maray math in our systems? Well, Mr. Maray was one of the most famous traders in the world. And he was born in 1942, and he became a master level trader in 1968. So Mr. Maray actually developed some theories from W.D. Gann. You probably know who Gann was. It has everything in common that I talked with you, and even more than that. Because Gann theory has one thing that most traders will not take into account, and that is the concept of timing. Remember the first part of the webinar, I was talking about timing. If you don't have a proper timing in the market, the chance is that your trade might not be a good one. So proper timing is important, and that is what Maray has put into his own system called Maray math system. Other thing that is important and that no one mentions to you guys is historical versus now moment traders. When you look at the Forex charts, you will see that price repeats itself. The biggest advantage of Forex market versus stock market is actually it can be predicted more easier than stocks, because Forex price repeats itself. If I had the time, I will try to show you what happened during 2009 GFC, global financial crisis, with equities and yen. Equities went down, Australian dollar yen went down. You can watch that also. And when my friend from Australia and I were actually trading Australian dollar yen when it was close to the top of GFC financial crisis, he actually said, okay, now this is a good time to maybe take a short trade. And we did together. He traded equities, I traded ODN. And it dropped hugely. The thing about Forex market is price repeats itself. And historical sellers and buyers are always aligning with now moment buyers and sellers. And that is the concept that I also use for acute trading. So we try to align historical buyers and sellers and now moment buyers and sellers. Because the chance, if the price in history dropped from here and started to reject from this region, in now moment there is a big chance that the price will also reject from this level. That is the biggest advantage of Forex trading. That is why I prefer Forex trading over, let's say, stock markets. I don't like stock markets particularly. Because, you know, it's enough to have only one rumor, one bad news about a company to actually put down everything. And I mean, in Forex market, you can go both long and short. You can correct the price. You can reverse the price. It's much easier. You see just charts, and the charts tell you everything. It tell you which indicators are in the confluence, and they tell you where you can place your trade to have a bigger chance for success. You just need to know what you're looking for, what you're searching for in your charts. Maray math was a perfect system, almost perfect. Of course, nothing is perfect without a good money management. So it always depends how you will approach to it. But it has octaves. It has 8 most important octaves. It's like music. When next octave is broken and next 2 are broken, it will make new octave. So you will see new set of levels. And that is the part of his Maray math system. We will not use his system. Actually, we use only Maray math octaves for EQ pivot point management. And this is what levels of Maray math describe. When price gets to 8-8 octave, it's hardest line to rise above. It is an overbought. Now, if it happens to rise, it will go to +1 or +2. But usually, it will reverse. What important thing in Forex market is, when price first hits the level, usually it will retrace at the first touch. But if it has like 2 or 3 or 4 touches, the chance is that it will break. So 8-8 is the hardest level to break. Then 7-8, usually the price will reverse of it. 6-8 is reverse line, and 5-8 is upper trading range. So when price is up here, we want to sell, actually. We don't want to buy, right? On every time frame, it doesn't matter. When price is close to 5, 6, 7, 8, we actually don't want to buy. We want to sell. Sometimes it may happen that 5-8 can give you a good price to buy. That's okay. But that is why we need to use MACD to see if it's possible. But if it goes down to 4-8, 3-8, 2-8, 1-8, we want to buy then. So sell there, buy there. That is the logic and one of the primary logic in Maray mat trading. We want to align our price with Maray mat to actually buy or sell somewhere here. How can we know where the price will react? Then that is why we need to use our modified MACD. It will give us a good approximation where the price might reject, because it uses momentum for higher time frames. So if you followed me carefully, you will see that actually we use these levels to pinpoint should we buy or sell, but also to go with momentum, where to buy and sell. Where we will close the price is Maray mat. Where we will make our stop loss, it doesn't matter, guys, stop loss. We can use previous swing and high, or we can use a fixed stop loss that has 1% of risk in it. So it's not that important. We will cover that in live, of course, sessions. But most important thing is where we can enter the market and instantly make some pips. Once we are in a trade, we do trade management. We don't leave the price and say, okay, it will hit 8-8 and I will close the trade. We don't do that. We need, if you're trading intraday, you need to monitor the price. So you need to watch where the price will be. If it's close to resistance and you are going long, then you want to protect your profits, right? If you are 30 or 50 pips in profit, what would you do? You can close it. You can close the half of it. It's calling scaling out, and put the other half to break even. And it's called riding a free ride. So when you do that, you are riding a free ride. So you can just let your profits go. If you are still going up, you can maybe opt to move your stop loss. So if the price is close to this resistance and it goes up, you just move your stop loss few pips below this resistance. It's called profit stop. Or you can use standard MT4 stop. It's called trailing stop after, let's say, 20 or 30 pips of profit. How you will do it, it depends on yourself, on your psychology. So that is why I'm not saying I might be trading this system that is actually good, and it is, because I trade it. But maybe for you it will be different results. You need to define first your plan. What will you do with your account, with your trades? Will you risk 1%? Will you risk 5%? Will you put stop loss below last low high? Or maybe you will use dynamic stop loss or fixed stop loss. Which kind of pairs you will trade? Will you trade Euro-CAD during the Asian session? Or you will stick to Australian dollar yen during Asian session? Those are the simple things that can make a difference if trading one simple and good system. So there is no, I don't know really how can anyone tell you, trade this system and you will be always on a winning side. It does not depend on system. System tells you where and when. And the creator of system should adapt it to you as a single individual trader. That is the problem why systems simply don't work. I mean, systems that are sold over the internet, PDF systems for $97. I even watched that there are some systems, $10,000. I cannot name it, of course. It will be, no, I simply cannot the name of a famous trader who actually was selling his systems for 10,000 euros. And after a couple of months, I saw that this system is being sold for like special opportunity, $97 or euros it was. What can I say about it? So first he got, like, imagine this. I went into his trading room in USA. So it was like 100 people in his room because he has a name in Forex market, huge name. And now imagine if 30% of people bought initially his system for 10,000 euros. And later, 2 months later, the system is like 97. That's a joke, guys. That's a complete joke. I don't know what to say about it. So it's a simple marketing that works a perfect time. And it will work great in such a country such as USA because, you know, people are having huge amounts of money and they don't know where to invest it. They simply want to buy everything that is shown to them. And then the guy is smart, comes up with his system, sells, let's say, 30 people for $10,000, make 300,000 in one single day or one single week. It's good. He doesn't need to trade his system. Why? He made 300,000 in 3 days. Why would he trade his system? It's called marketing, guys. So, not possible to make any money, right? How you can make money with this kind of systems? Because you need to have a mentor. You need to have a person who will dedicate the time to actually explain about it. You need to have a good broker. You cannot place your money to a bad broker and you make money with this and your broker tells you, okay, I cannot give you any money because, I don't know, for some reason. There are brokers who simply won't allow you to withdraw the money. And you can go to forexpeacearmy.com. Just go to forexpeacearmy.com and search for Admiral Markets. It's easy. Type in Google Admiral Markets, then Forex Peace Army, and you will see reviews about me and about Admiral Markets. And that is the first thing you need to do. Where would you put your money? You want to be safe. So again, it's not about system, and sometimes, guys, it's not about you. The worst thing is you can give money somewhere and then you make money and they say, you made so big profit, we won't allow you to withdraw the money. It happened a lot of times to brokers who are not regulated. So, here, let me get back to Maray, Mr. Maray. I really appreciate him and his work, and he was one of persons that I respect as a trader, because this is not a, BC, peep, I won't say, bad things. This is what works. Maray Met works. And when combined with other indicators, we have the system that is not copied from Mr. Maray, but actually uses the logic of timing, momentum, and retracement. If price moves beyond 8-1 and -1, then there is 95% of time it will reverse when it hits 2-8 levels. So that is when we make counter trend trade opportunities. Okay, so that is now also one of the rules. When price hits these levels, we look for other things for our indicators that will tell us to make counter trend trades. So we are not picking randomly levels where to go long and short. This is how usually Maray Met looks like. And this is the truth in Forex markets. 8-8 lines. Usually when people see that price is moving up, they wait just a small retracement, enter the market around 8-8, and what happens is they lose the money. You know the pattern. Price goes up like this and it starts to drop. And here, as soon as it starts to drop, you go long. No, it usually drops more and then you can place your long. So that is why we have timing. We don't use our entries when price is trying to drop to 8-8 or 7-8. We need to go down. If it doesn't go down, wow, it doesn't matter, guys. There will be another day. So don't be impatient. Sometimes the price will go around 8-8 and then reject. But very often it will drop. And you are in a trade. So what can you do? You need to accept the loss. right? So that is what I'm saying. Sometimes the price will not reject from the same level, but you will wait. There is another hour, another day, so there is another market. You can trade, instead of euro dollar, you can move to Swiss yen. With Markets, you can trade whatever pair you want, because it doesn't matter. You can trade, stick to majors and minors, but you can trade also exotic pairs. You can trade Australian dollar, New Zealand. So, you know, it's not market dependent. You will always have the chance to make a trade. Same is with downward movement. When price hits -8, whatever, it will usually reverse. But new traders will usually exit a position or will open new position when price drops. That is what I was saying. When price is dropping, traders who are not that experienced will sell the price. No, actually when price is dropping, you need to think where to buy it, because you will be buying for a better price. And then you need to align trend and momentum. If the trend is down, okay, then you wait for the price to go up to sell it. If the trend is up, you need to wait for the price to drop to buy it. You cannot trade with a single time frame. That is why first part of the seminar was easy. That was the system just for scalping. With scalping, it doesn't matter. For 10, 15 pips, you can trade one single time frame. But if you want to make 30, 50, 60, 80 pips, then you need to align different time frames. So, this is what Maray says. All markets will want to trade inside its trading range, 3.8 to 5.8, 43.75% of the time. If the market goes up too far, okay, the Maray mat will set next octave, but only if it breaks 2.8. It may sound complicated, but when I open the screen, you will see that it's actually not complicated. But this is important to know, because this is what Maray was saying. This is not what I made up. Long trades, when it's reversing off 1.8 Maray mat line, that is best odds potential. So we go usually long, we try to go long, when price is rejecting 1.8. And it's written on a chart, you will see 1.8. The best odds potential is 0.8 to 8, and then minus and -2. So that is the best time when we can enter the market. Usually it will correspond to 88.6 Fibonacci retracement. Now, I also trade price action. There is my system called Camarilla MACD. You can read my analysis and session recaps. That is Camarilla MACD, where I use price only. But because traders simply cannot understand the price the best, I try to make a system that corresponds to price action. So when you buy low, usually you will be buying off 88.6 Fibonacci in price action trading systems or methods. With Markets, it's usually these levels. And short trades we make when the price hits 7, 8, and this. But this is not just that. As I said, we need confirmation that the price will actually reject when it hits those levels. Finally, before I move on to charts, this is EQ pivot point indicator. Okay, this is EQ pivot point. And what is the important thing about this EQ pivot point? Well, the most important thing is that it actually uses London open time with our broker to actually set correct pivot points. Because pivot points on EQ are set around your London open. Okay? So when London opens, it's usually on our platform, it's like 10 a.m. So there is setting an indicator. We press 10, and you will see these levels. So pivot point is standard daily pivot point. R1 is resistance. In between, there is so-called mini pivot point, and that is M. So price will usually reject from pivot to M and then proceed up and down. So for traders who are trading intraday, they use EQ pivot points. For traders who want to swing a little bit more, they use Maray mat. Everything on the same chart. So you have the possibility on the same chart to scalp swing, intraday, counter trend trade, swing trade, whatever you want, guys, whatever your preference is, with the same rules. And here, the levels, M2, S1, M. The important thing, guys, don't forget about this. When price breaks R1, it has 70% of chance to reach M4. And if the price continues, it will hit R2. And usually, it will reject from R2. So we don't make long trades when price is around R2. And if it hits R3, we go for counter trend trades. Same as with Maray math. Here also, you see, S1, M1, S2. So when price goes below S1, 70% of chance that it will hit M1. And then if it proceeds, it will probably hit S2. And then it might start to reverse. So we know when not to take a trade. That is very important. So it's not system. You see, this is method for trading. It's not like every system tell you when moving averages cross and trend lines, you buy, you sell. No, you cannot make money in the long run trading like that. You need to know about timing, about all these things that I'll be showing you. So here I'm not showing you now. I will show you the real charts and example for trades. But to get a deeper insight, you need to have webinars with me live. I don't have PDF for this because I'm not selling a system written on PDF for $97. You need to have live classes. You need to ask questions. I need to see what you are doing to tell you, okay, this might be good, this might be wrong. That is how traders and traders who come here to talk with you should teach you. Not give you their systems and say, now you will buy, you will sell, and I go buy, and I never see you again. We need to be live. Traders who teach, mentors, should be live, should be ready to answer every single of your questions. So if you send me your charts and say, I'm losing the trade here, no problem, everyone loses a trade. But let's see what was wrong, why you lose a trade. Why did you actually lose that trade? There is thousands of possibilities why you lost the trade. Guys, you need to know that, you need to understand that. Maybe your timing was wrong. Maybe you traded pairs that shouldn't be traded. Maybe there was a bank holiday, but you still traded during the bank holiday. Maybe that was just a simple event that switched the tides of your trade. We need to identify that. And when I teach you to do that, you will know everything that should be done in order to stay profitable. And forget about Holy Grail. You know what the problem is with most traders? They will switch from a system to a system. Because if they have 2 or 3 losses, they will go to find another system. And they will always search for systems in hope that they will find so-called Holy Grail that will give them best possible trades so they will become millionaires and they will keep, you know, like a Gollum in Lord of the Rings, their secret the ring on the finger and not give it to anyone. No, that it happens, but you will never find that secret ring or Holy Grail. No, never. That's impossible. Timing, momentum, aligning historical versus now moment buyers and sellers. Which levels price can reject? Which can you buy? Where can you enter the market? Everything is incorporated into EQ. And that is me and Chris who actually will teach you how to stay profitable with system. But we need your feedback. We cannot just give you this and say, bye-bye, it's over. I need to know where you are making mistakes and if you are profitable, where you are profitable. Maybe you did something that we didn't cover, but you still are more profitable than us. So my result can be positive, but maybe you will have bigger result, better result than me. So it doesn't matter that I am a bad trader or you are better or that I am a better and you are worse. It's not about who is good, who is bad. We all want the same thing. We want to be profitable. That is what we strive to do. And that is why as a trader also, not just an analyst, I want to tell you how to be profitable. And here, so EQ pivot points. breaks of R1 towards M4, 70% of chance. Breaks of S1 towards M1 and S2, 70% of chance. We use it for intraday news trading. They are valid for 24 hours. And it's very important because EQ pivot points show historical price. So you can see in history also where the price rejected, where the price. It was not easy to create this, to be honest. Now some people will tell me and ask me, why are you selling this or asking for a price if you make money with this? Well, guys, the answer is so simple. If you invested the time for that, like me and Chris, if you actually want live webinars, time is money. So everything costs, right? There is no free lunch. We invested time. I also traded a live account with this. I can show you a statement. There are 3 loss statements with huge losses with this. And you know why? No one will tell you that. Because I don't know if the system is good if I just trade it on demo account. I don't know if system is good. So I opened small accounts and I lost like 1,000 euros until I made it to actually be good. So I needed to invest real money, not demo money. I needed to invest my time. I needed to get the coder for this system, and those coders also wanted a price. So everything was like 2,000-3,000 euros without my time. And I invested really a lot of time, a lot of hours to see where the system is wrong, to see why I'm losing trades. I'm speaking the truth. I can show you 3 account statements with huge losses. Not huge. I mean, those are 200, 300, but those are losses, guys. And those losses were made while this system were in creation. Who will tell you that those kind of things? Everyone will tell you this is the best buy and I will never see you again. It takes a lot of time and effort to make something that works. And it still might not work if you don't follow the rules. If you don't follow what I was saying at the first part of the webinar. It still might not work. The system is good, it's great. But you need to follow it. I mean, you need to understand the money management principle. We can go through that again, of course, on live classes. Everything that needs to work with this system. So that is why this is a method. Comprehensive method. Okay? It took a lot of effort. And then I started to see good results. But if I only traded with demo account, I wouldn't know psychology of trader. So, because I'm a trader, if I place a trade here and it goes in a loss, was it because of the system? Was it because I was trying to still buy it higher or sell it lower? So I need to fine-tune every single detail. And it took a lot of time, and really it wasn't easy. It wasn't easy. That is the fact. I didn't make this for 2 days. For many months, I was approached by many traders asking when it will be over, and that's it. So, and now I will open real charts and show you how it looks. I will show you the first EQ Maray Met and then EQ Maray Met Lite. So you will see how it looks. Also, for contacts, and if you want to get a system, please write to Mr. Zalan. You need to have a real account with Admiral, and then you will receive discount, huge discount. So, any information, you can find me, you can write me an email. I'm not going anywhere. I will not disappear. So, maybe we will have more seminars. Maybe we will have some live seminars where you will trade live with me. Who knows? We will see. There is a lot of possibilities to actually trade. And here now I will open, I need a real chart. Okay. So, it should be here. Let's see. Okay, this was and now let's see the first one. Okay, this is it. And now to make it even look more better, I will do it like this. So here you see the chart. Okay, very, very easy. You also need to see time frames because we, as I said, need to align these time frames. Now, excuse me if I'm a little bit slower because I need to watch this monitor here. I don't see my screen, so it might look okay. So what are these indicators, guys? Here, this is so-called dashboard. and it shows different time frames. We will get to that, back to that later. This is actually Maray levels, what I've been talking about, with, you see, levels, clear levels, buy premium zone, sell premium zone, weeks, ultimate resistance, overbought, extreme overbought. So these blue lines are actually Maray. These candles are just swing points. We can remove it. So for traders who are new, maybe it will be easier to see where those swings are. So these arrows show swing points. These are AQ Maray pivots here, you see. And here is the core, the engine of our method. That is effectively OSMA MACD with two lines, and it's called Elite Currency MACD. Okay, that is what we have on our chart. So how to find a good trend? So we just drill, guys. For this, we go to daily. Now, when we see that daily has a strong histogram, this is called histogram, okay, this, we can search for trades. This is red. So first we need to see which pair has a thick red histogram. So let's find maybe a pair. It doesn't matter which pair because I said you can trade everything with this. Let's try to see which pair has a thick histogram. Okay, let's assume that this is, as I see, thick histogram. So thick red histogram. See, let's say that this is thick red and it is thick red. It doesn't matter. This is the closing price of Friday, so we don't take that into account. So this is thick red. Then we zoom in to 4-hour time frame. And let's see 4-hour time frame. And you see now, great example, guys. You see histogram is going to be blue, but you see blue line is above red line. So it means that this is our time frame for entry. You see? Now we can measure here where the price will reject. Because this is short here. You see the daily is showing very short, it's thick histogram, so the trend is to the downside. We want to sell higher. We go to 4-hour to see where to sell it. Okay, because it's retracement. Blue is above red. We want to sell it around 4.8 and 3.8. How will actually we sell, when we sell? When the histogram starts to change from thick blue to thin blue, we place a sell trade. So there is the rule, or there is another rule, additional rule. If we see that this is Bollinger Band indicator, if we see a pin bar outside Bollinger and inside close of Bollinger Band, while our MACD shows blue above red, we enter the market. So these are, I'm talking about simple rules. Now, on live webinars, you will see additional rules. But this is the most simple that it can get. So here we see that probably if we saw a shooting star here, that euro yen on Monday will go down. Because the trend is to the upside and we can actually sell from 3.8 and you see the spike of the candle here. If it closes, it went above. If it closes like this, it closed like that. So probably euro yen, watch the price on Monday. Euro yen will probably be a sell trade. Okay? Now let's find another example. For example, euro New Zealand. Let's see. We start always from daily time frame, guys. Always from daily time frame. You see, it's blue. So it means that trend is blue. Then we move on to 4-hour. Let's see 4-hour time frame. 4-hour time frame. You see, it's still trend in 4-hour because we have a blue line and we had a red line above. So we had trend and momentum. So 4-hour is not good for any entries. It's too high. Then when we go, we want to take a trade on 1 hour. 3 time frames. 1 hour here. Okay, clear situation for me. I want to see price down to, let's say, 5 or 4.8 Maray, and this blue MACD line should break but still be above zero line. Okay, so this is very clear. You see, Blue line should go down below red line, but still above zero line. It means that the trend is to the upside, but we have a retracement where we can make an entry. So watch the sequence, guys. Watch this again. Daily, watch this. It's blue, thick blue. We don't watch these lines on daily time frame. We don't care. We just watch for other time frames. So daily is thick blue. 4 hour is thinning. You see, thinning. And blue and red, so we have a strong trend. We won't be buying at the top, right? It's timing. And 1 hour, when blue crosses the red and price drops down here or there, I will make a buy entry. How? If I see that Bollinger Band, there is a pin bar down, and inside Bollinger, at the close of the candle, I will make an entry. But if I see that histogram, because it will become red when it goes here, it will become red. If it changes from thick to thin, immediately I will enter the market. So there are two ways to enter the market with Market. So we don't have the time to full explanation. So that is why I'm saying you need to come to live webinar. I will dedicate to you a complete time to show you every single possibility. Just a core explanation. I had great results with this kind of approach. I made 3,000 euros from 300. I have my FX book. I took a screenshot. And that was great. I can also show account curve for anyone. It's great. Because that is how I made profits, by these approaches. But I knew when to enter the market, when to exit the market, when not to trade. And also that is the same for news trading. 15 minute, 5 minute, 1 minute. Because news trading is just about spike trading. You can trade NFP with this. I will teach you how to trade NFP with this. You need to go with 15, 5 minute, 1 minute approach. It's very easy, right? Maybe it sounds complicated because all people who were with me on this EQ were telling me that it's a bit complicated for the first time. But that is why I dedicate my time to teach you on one-to-one webinars. Here, this dashboard is actually showing you what you can follow. For intraday entries, we can actually remove weekly. Here, display weekly. False. We can also put display MM5 if we don't trade news. So actually, this dashboard will look like this. When you see colors, it corresponds to these colors. To these colors here. And you can also enter pairs, whatever pairs you trade. When you go to indicators list, you just go to EQ dashboard, and let's say pairs to display, you can go like this. So we will make it Euro-Yen, let's say, ECN, like this, and press OK. Here, you see, Euro-Yen. So what did I say? Dollar daily time frame is to the upside. So you see, it's up. 4 hour is still to the upside, right? It shows blue. And now 1 hour, when it changes, it will show red. So that will be your time frame for entry. That is where you will trade your 1 hour chart. This is actually Euro New Zealand, but it's probably correlation is the same. It's same for Euro Yen. Same. So Euro Yen here again. Daily time frame. What is this now? It shows, yeah, but as I said, it probably didn't catch because the market is not live now. It shows different colors. But it doesn't matter. We will stick to Euro New Zealand because it corresponds. It needs to have one tick of real time to actually get these colors back. But because market is closed, it's unfortunately Saturday. I hope that next time we will have this during live market hours. So maybe I can show you also live trades with this. So it needs one tick to show these colors. But here on Euro New Zealand, daily, you see up. 4 hour is also up. Here, it's also up. You see, and 1 hour, it needs to go down. So it needs to actually go, this blue needs to go below. And then on Euro New Zealand, on 1 hour, it will show red. And that is how you can scan 25 different pairs immediately and choose the pair which trends the best. So for example, Euro New Zealand, when it goes down to 4.8, 5.8, I would look to buy. Let's see Euro Dollar, for example. It's also one of the popular pairs to trade. And actually, when you see Euro Dollar, you might be asking, should I trade Euro Dollar or not? Let's see if I can see Euro Dollar here. I will move it a little bit down. Here, Euro Dollar. See? Euro Dollar. What does it say on daily? Let's see if it got the price correctly. You see it's red. It's also red on dashboard. We don't have a clear trend on daily. So what I do usually, I either try to trade news with Euro Dollar, 5, 15, 1 minute, or I will wait till I have a clear trend on daily. Is there a trend on daily? You see, up, down, price goes up, down. There is no clear trend, so we don't trade it. Why would you trade Euro Dollar when you have something better to trade? Let's see pound dollar, for example. It seems that pound dollar is in a good downtrend, so let's check it. Let's see if I see pound dollar. Yeah, here you see the spreads are also tight. Okay, guys, now it's correct. Daily, you see dashboard also. Daily. Strong trend to the downside. Price action, watch this. This is Brexit. I actually wrote the article about Brexit, and you see the price was really having a strong sell-off, and now the price is in downtrend. If you watch these candles, they're actually going like steps, so it's a trend, downtrend. And also daily here, 4-hour time frame. Let's see. Okay, strong 4-hour. So we need to wait for retracement. Probably retracement will come 1 hour. Okay, here, retracement is underway. You see, blue is crossing the red while still below zero. Where would I like to sell? Well, I would probably go and sell it around this level or this level. Maybe I would wait for, let's see, historical sellers. Here, you see, there were a lot of sellers. So I think that the price, when it hits the level, if I get a pin bar or I get the change of color of histogram, I will enter the market. So my levels to watch for short entries are this one and this one. Let's wait for the Monday to see. But I'm on this trade. I will definitely make a trade on pound dollar. I just need to see where it will reject. So around this level or around this level. If it goes straight down from this level, well, I will be missing the trade. But it will keep me out of the bad trades for the long run. Because I cannot sell it now. It's too low. Price is really too low. We need to wait, guys. What did I say the first time of the beginning of the webinar? Stay still and the market will come to you. So I will be standing here and I will wait. If it comes, I will wait for the exact entry. That is how I do with EQ. Trade management and money management. Now I will go sweet with this. I will be quick with this because we don't have much time. But let's say 4-hour time frame. Watch this Maray. If you want to make it a swing trade, then you watch Maray. There are also rules that I can explain live, one-to-one, how to make swing trades. So if we sell it somewhere here on 1 hour, we want to see this level, and eventually we want to see this level. And we won't be holding our trades because this is very strong support. So on 4 hour, we take exits if we go with swings. If we go with intraday trades, then we go with Maray. You see, I have combined 4 approaches except for breakouts. I didn't cover this. So you can trade swings, you can trade intraday, you can go with news trading. Those are effectively scalp swings with a one simple method, right? It might sound a bit complicated, but that is why we have live classes, right? And another thing, this is light version of our EQ. Okay, this is simplified, guys. Now this is for traders who don't have the time to actually, better to say, who are not that patient. So who want to actually trade maybe a price that will give them more chance to enter the market. So this is not a swing. This is intraday method, okay? And this is just for traders who want to trade intraday. Again, with this system, we don't aim for 10 pips. We want to make 20, 30, 50 pips with this, and it's possible. How we trade this? This is simplified. Instead of MACD, actually, we use RSI. But watch this. This is multiple time frame RSI indicator. So these three lines are giving three different time frames. Okay, guys? 3 different time frames. So, blue, red, and yellow. Yellow is daily trend line. Red is 1 hour trend line. Okay, 4 hours, sorry. And this one is actually hourly trend line. And now we need to see the settings in this indicator. When you go to actually RSI here, you will see 60, 240, RSI period is 7.5. That is what is very important. We don't want any lag because RSI is leading indicator. This is Bollinger Bands, but set on 1 hour time frame. So this shows you actually hourly Bollinger Bands. And these candles are RSI candles, okay? So they switch colors from blue to red. Also the rules will be explained live and fully when we meet, but actually it's also very, very simple. The core principle is you wait for the pullback towards one pivot point. These lines determine the trend. If you see that at least 2 lines are above or below 0 lines, we can say that trend is either up or down. And if the price is below middle Bollinger Band, the price is in downtrend. If it's above Bollinger Band, middle line, the price is in uptrend. So here we can actually see that there was a buy trade here initiated after this candle. It was a big candle, but actually that was good enough to give us some profits. Of course, I would think whether I would trade this big candle because it's really huge, but let's say that it was good to trade. Here you will see another good example of short trade opportunities. Watch this. Price goes below. Here we see RSI, and then it pulls back towards the line. And here you can see actually that there was another candle. So for this system, because you trade intraday, you will have bigger chance to enter the market based on the same multiple time frame principle. But instead of waiting maybe for price to get here to sell, you will have the chance to sell it here. But still again, your stop loss will be, if you use stop loss as I explained, will be lower than on the first method. So this is simple intraday method. You will find a lot of good examples here. Really, you see sell here. There was also a sell initiated here. And everything is happening around these pivot points. So you will know when to exit the market, where to take your profits, when to move your profit stop, when to place your break-even trade, whatever. There is tons of opportunities with trade management. Here, you can roll on to test this. There was buying opportunities here. See, buying opportunity here. As I say, 3-4 trades per day. I mean, no, 2 trades per day is enough to make your day happy. And you will not be euphoric, you will not be over trading, and effectively you will be protecting your account by staying out of the market. The drawback of this system is that it's so good that it can make you overtrade. And that can be a bad thing. Because sometimes when market is ranging, I need to find when the chart shows range. You might think that it's a good opportunity because system is accurate to make a trade, but it's not. Because you need again to think as a human being. If, let's say, GBP ORI, for example, just for example, if it's ranging, you don't want to trade it. If you see that ATR is low, we have also ATR indicator that shows you the average movement of the price. If you see that ATR is 30-40 pips, you don't trade it, guys. You don't trade it. Even though the system might give you the entry, you don't trade it. So you need to filter out mechanical part of trading. And you filter it out by human factor, by knowing when to trade and when not to trade. I would like to see the example where the price is ranging. Here we have tons of short trades. You see, a lot of, watch this one here, this one. Everything is really, I don't see here. The price might be in a bit of range, you see, up, down, but still, I see that there was a good trade here. There is ATR indicator that we actually put, and they say if the price is ranging or not. I have the indicator and it's included in the package. So guys, I think that now it's time to actually go for questions and answers. Sorry, Susanna?
Can you explain the MACD again?
Yes, one more thing, guys. You can ask any questions about this system, whatever you want to ask me. But a gentleman here in the front rows, he asked me about first slide for our double MACD method, scalping, and I will again explain the rules. For that, I will need to actually open my first presentation, and there is this one, I think. Yeah, great. Here. Write it down for double MACD scalping. This is scalping, guys. So forget about 50 pips. I mean, if you follow your profits, so let's say that, for example, let me just show you this. If this is the resistance, and you made your entry here, you just move your stop loss just below this resistance where price breaks it. When price breaks next resistance, you move your stop loss here. So effectively, if you use that, you will be able to make your profits go from, let's say, 15 pips to 30 pips. But have in mind, this is scalping system. It's not like second two systems where you can make 100 pips. It's different. So for scalpers, this is a good way to scalp. This was the part of practical naked trading that I also developed back in 2010. And you just need this, as I said, indicator. You can, as I explained already, write to Zalan, open a real account, and Zalan will send you this indicator, MACD 2 line. So here, this is rule for long entries, and this is rules for short entries. Okay? So short entry rules, I will explain that also on the charts, but take your phones, you can snapshot it. It's very easy actually. And here, long entries. Again, this is the example of long. Blue above red, blue MACD, and stochastics from below 20 to above 20. It's making a curve, a U-turn here. You see a U-turn. Okay? And this U-turn actually is telling us to go long. So that is when you go long. And your first profit is at hourly pivot point resistance. But if it's broken, you move your stop loss just below 2 pips. And if you have a good momentum, sometimes it may directly go to 30 pips of profit. It depends on market, not on you. For example, maybe we can see some example. Yeah, this is not the real chart, so it doesn't matter. Maybe you see this candle. If this candle goes up here, it does not depend on you. It depends on market conditions. So if this candle went up, you would just place your stop loss here. So sometimes you will see that price is giving you a huge chance to protect. So whenever you see that market is moving in your favor, let's say in going up, you move your stop 20, 30 pips in profit. So your stop loss is 30 pips. And if price stops you, you will have 30 pips. That is one way to manage the trade. The second way to manage the trade is, if you see that the price is going up, scale out. If you have at least 0.20 lots on ECN account, or on standard account 0.10, it doesn't matter. Take the half of your trade and put the rest to your stop loss plus 1 pips. That is called break even. It means that if you are stopped out for a second trade, second part of the trade, you will have no losses. It's called scaling out. So those are effective ways to manage a trade. And if you use that, you should be in profits. Not just take 30 pips, put stop loss to 10 pips, it doesn't work. It's mechanical trading. And again, you're humans, you're not robots. So you cannot say, I will always have 10 pips of target and 20 pips of stop loss. No. Use your human factor. So, if the price goes up, move your stops in profit. If the price goes down, move your stops in profit. So, for short trade opportunities, same thing apply. If you take the short here, red above blue, red MACD, stochastics above 80, and price is going down. You see, move your stop here and scale out, put your stop loss to break even, and you see sometimes you will see this, and it can give you 50 pips of profit. Don't exit immediately when you're in profit. Manage your trade. But the problem is, if you're over trading, if you're putting big leverage, then you will want to exit the trade prematurely, before the time, because you are afraid that your 300 euros will go away. That is why you close your trades. And that is why you should trade with smaller risk. With lower risk, you won't be afraid for 10 euros. So you will maybe, you will let it go. And that is how you can make your trade management. So I think we covered that. Now it's the time for questions, guys. If you have any questions, Zalan is here. He will translate here. Can you be a little louder? I cannot hear you.
There was a slide where it was showing the indicators parameters.
Aha. Yes. Here. Sure. Next question, guys. I'm open here. Please do ask me. If you have any question, again, I'm saying for next two strategies that I explained, we can do live teaching. So if something is not that clear, we can cover that on live webinars. And actually, I will show you my curve, equity curve on live account. So maybe you can make it better than me. So why not try to do that? Yes.
What is your initial stop loss?
Okay. For which kind of, for this strategy? Okay. Again, for example, let's open one. This is better. For example, if I trade pound yen, what I will do? I would always go for a swing low. For example, okay, here, this is a short trade opportunity. I will go with a swing high. So my stop loss will be above swing high. But not like, let's say, we have a signal here. I will mark it down. So we have a signal. Okay, I need to move this. Okay, here, this is a signal. So stop loss cannot be 10 pips. It's nonsense. So what I do when I see that that stop loss is a little bit low for me, I would place it here. So 3 to 5 pips above most obvious swing high. So if the entry was here, I would probably place my stop loss here. If I want to do it's aggressive trade management. If I want to be with a lower risk, very low risk, then I would put my stop loss here. But it's like risking 0.5% of my account. If I want to play with a little bit higher, because this is scalping, then I would place my stop loss here. And I never ever let my stop loss to be lower than 15 pips, never. Because it's too low, really. Because, guys, if you have always small stop losses, you can suffer it's called death of 1,000 cuts in Forex market. So your account will be butchered totally, you know. You don't need to have a small stop loss. Always use a little bit higher. So for short trades, I would place it here. For long trades, let's say here, a long trade opportunity here, I would go, for example, just for example, here I would place it below this level. So most obvious swing high and low. And also it depends on your risk. Of course, you can place 100 pips of stop loss somewhere there below. But you need to have your risk 1%, not more than that. No problem. I hope that it helped. Yeah.
Okay, so so when there's going to be a lot of news coming out, like for example Friday, and there are a lot of bad news in Canadian dollar, are you going to like put more trades on it, or are you going to leverage it up, or are you going to scale out, or what you want to do?
For this strategy.
For this as a strategy, just like not specifically this.
A general strategy.
General.
How I do that? Good question. Because actually there were very bad news for CAD. Oh, yes, all news was bad. So what you should do, don't trade, when you see the bad news, you wait. And then on lower time frames, you will see retracements. And then you can enter short. Because if you watch dollar CAD, it was going up before the news. And after the news, it dropped. So during Friday, after the news, you should have taken short trades. On Monday, we will be looking to go short again. On Monday only. Not on Tuesday, just on Monday. Because traders that missed the part of Friday when CAD actually was, dollar CAD was dropping, right? They will again enter the market. Okay? So what you need to wait is for Monday. And then you should go for opportunities that are with the trend concept. Let's see, I will open the chart, no problem. I will open my personal, let's see, dollar CAD. I will just need to find dollar CAD. Yeah, exactly, this is what happened. Before the news, actually, I'm correcting myself. Before the news, it went down. Before the news, it went down. Here, on 1 hour, it can be seen. Actually, here, you see what was before the news? It went down. And after the news, it went up. So on Monday, you should go up. So watch for buying the dips opportunities. Okay? So what I would do, I would go with probably with my EQ. I will open it. Let's see, dollar CAD. Yes, you see, 1 hour, then see 4 hour. Yes, total, this is uptrend, definitely, you see. And I would probably wait for 1 hour to drop somewhere around this region, or eventually this region here. And here, I would like to see a drop to this level. And yeah, it will be like 60, 70 pip drop, and I would go long. So I would wait and buy it around this level here. I wouldn't like to buy it here, too high. So around this level, this will probably go up. So it's 5.8, so it's okay. Yeah, it's okay.
At that moment when the news comes out and you see, you don't...
Yes, you can trade, but you need to go with 15-minute time frame then. You need to drill. With this system, you can trade. You wait for the news momentum, then you wait for retracement. And you enter. So actually you would enter on 1 minute. Here, after the news, you can trade the news, but only as news spike. Only as news spike. You see, you need to wait for this to settle down, then trade. So when there is news, your intraday position doesn't matter. So you open news trading template and trade the spike. Because if the news was good, chances that the price will drop and then rise again. Like this. Because bad CAD news will boost dollar CAD. Dollar goes up, CAD goes down. Dollar CAD always goes up when CAD news is bad. And if dollar news is bad, dollar CAD goes down. Okay? So news trading is different.
So why do you use exactly these MACD numbers, exactly these numbers?
These are default MACD numbers, and these are shown in William Blow Momentum Direction Divergence. That was the first book that I have ever read in Forex market, and I always stick to that core numbers on MACD. And it works good because this is not just a MACD. This is modified OSMA. It's like oscillator of moving average. This is not ordinary MACD, and it works good. And it's, you know, it's like I've been trading MACD like last 6-7 years, so I always stick to these default numbers. Yes? Sure. My nickname, Tarantula. When I was starting to trade with Forex Factory and post my trades on Forex Factory, euro dollar was dropping down. And every single trader on Forex Factory was shorting euro dollar. And I was thinking, why short euro dollar? I was still not very active on Forex Factory. I made my nickname, but I was always trading when price tells me to trade. And I was thinking, if everyone is shorting euro dollar, there must be a time frame that we can actually buy euro dollar, because it won't be dropping like a stone. It needs to have a retracement. Remember, this is a good question. When you are long and you exit the market, price will go down. That's because if most traders are exiting longs, there is automatic sell into the market. Also, when price is going down and you cut your trade, it will retrace when most traders are cutting. That is called profit taking, and the price automatically corrects. I knew about that, and I actually post long trades for euro dollar. So when tarantula is weaving a web, it goes up and down. And remember, tarantula is spider king, the strongest of spiders. So I'm always making a traps for pips, and I don't care if the price is going up and down. As a trader, I don't care. As an analyst, I care, because I need to explain to people where the price and why it goes up or down. But as a trader, I don't care. I will trade it. So I trade both up and down. I made my nickname because spider is going up and down, making traps and pips. And actually, it's like weaving a web. Swing, up, down, up, down. And don't forget the tarantula, the biggest and the baddest spider in the world. And then, actually, traders started to notice my trades. I had some good comments on my profile on Forex Factory. And because I gave them signals, literally, to go long on euro dollar, to go short on dollar Swissy. And they said, well, this guy actually giving us real-time signals. Why not use it? And that is the time when I really was posting only signals. But that is, I don't do that anymore. I want to teach people to trade, not to follow just me. That is why having all this webinar stuff, I wanted to teach to do it yourself. It's not grateful to sell signals. Some people will be easy and they are happy with 20 pips. Some people will say, I don't want 20 pips, I want 200 pips. Who can guarantee you 200 pips, guys? We trade what we see, and we exit the market when our risk to reward is good, when we see that price is hitting resistance. I don't know if it will move 200 pips. So we trade up and down. We don't care where the price will go. We trade what we see. Next question. Come on, guys. I know that you have questions. Yeah.
Okay, so the question is about the time frames. when you actually enter the market and you have your strategy and everything is, and you actually enter the market, so you make the trade.
Okay.
But like on Monday you make it, and on Tuesday it suddenly disappears, the entry points and the signals and everything.
Okay.
So then what you do and how you actually scale out, and or how you use the time frames for this strategy.
Good question. Here. And you can actually do backtest by watching how it behaved. By like this. There is no mechanical rules. But what you can do is actually just roll to the left like this. And you see what the price went. What I do then, your question. Let's say that we are long here. Okay? So we are already in a trade. Okay? So we are long. And we are in profit. But next day, on Monday, the price will probably start to retrace. Because if I see that this is, what is this? 8.8 ultimate resistance, Maray mat. What is this on 4-hour time frame? 8.8. What I would do, I wouldn't let my trade go indefinitely. I would scale out, taking half of my profits and putting the rest to break even. So if I made one lot of a trade, I would go with 0.50 profits, I would cut it out, and put the rest to my entry point. Or I can move my stop loss somewhere, let's say entry. Let's see, if my entry was here, I would put my stop loss here. Or let's say, here. So I am effectively riding a free ride. I don't want to hold trades for more than 2 days, really. Sometimes, if I see that movement is really strong, then I hold the trades. But I need to see that it's not close to this resistance. That is why timing is important. This is resistance, both on 1 hour and on 4-hour time frame. Especially on 4-hour time frame. This for intra-week trading, watch this, it's 8.8. So the chances that the price might start to go down, just to be bought later. So if I'm in a trade, I would either scale out, put in my stop loss to, let's say, here, and then I would wait for another buy opportunity. So I would wait for a price to get here to buy it, actually, if my other rules are showing that. So daily is up, 4 hour is up, so 1 hour I need to wait for here to buy it. But I will protect my trade. That is the simplest answer to your question. I will scale out or move my trailing, my stop loss to actually be in profit. You need to do that. Else, another news might bring it more to the downside. Trading is not as it was 10 years ago. It's much more volatile. So we need to adapt to current market conditions. So current market conditions are telling us price moves up and down all the time. So if you are long, you want to take your profit. And that is why you take with a low risk. If you are wrong, you have still 2 or 3 chances to make it up for the same day, while still being in 2 or 3% of risk during the day. That is why you need to think about it. Whenever you see that market is close to resistance, you will exit the market in some way. Scale out, move your stop loss to a positive territory, take half of your trade, whatever. That is called trade management. I cannot simply let my trade run. I can, but I need to move my stop loss to break even +1. If I do that, I won't be making any profits, and I'm risking that the price will reverse, hit my stop loss for not any profit, not a loss. So you need to decide what you will do. That is what makes us all different. I might take all the profits. You might scale out. Another guy might maybe use a trailing stop. That is why same strategy can show different results. We all are managing our trades. Yes? Daily. The biggest mistake was, I can say that in the beginning and later, even later, during my trading, I made revenge trades. That is not good. So when you are wrong, you tend to reverse the price and it goes to hell. That is when I made big losses. So that is why I made plan, and I said I won't be taking revenge trades. That is a huge mistake. Another mistake is forgetting about the stop loss. The account that I showed, that one that is not that good, that is my biggest mistake for that account. I forgot to put stop loss. I just simply forgot to place it. I don't know, I was distracted by other things, and I was thinking, well, I will manage this trade manually, and I forgot about the trade. And what happened? I was in a big loss. Also, one of mistakes that I made, but I don't make it now, everything that I was talking about. So that is trade EuroCAD during Asia session, taking, let's say, some pairs when it's not time for that. Those are all mistakes. But mistake to trade, let's say, not making a stop loss, that is a huge mistake. Because I don't know the risk. My risk was way too big. That is, you know, without having a stop loss, you are risking too much. You can risk more than 5%, that is dangerous. Because you just wait then for the price to go up, or you close the price in a very negative territory. That is a mistake. And we always need to think about trade management. That is why I'm saying trade management is of utmost importance, especially for intraday trading. And what was the other question? Yeah. How many hours? Well, it depends. Because I have a lot of work to do and I educate other people, and then even if I didn't do that, I would still not trade a lot. Let's say first 3 hours of each of London session and New York session. So like, let's say 6 hours. But I'm not trading actively. I make one trade during the London session or 2 trades, and then during New York, if I'm successful, I make one more. That's it. I'm done. Because also one of the mistakes is make a trade during Wellington session, during New Zealand. Nothing is moving then. There is no trend. And if you open a trade at around midnight, chances that Tokyo will make your trade bad in a stop loss. So if you want to trade Tokyo session, you need to be awake at 2 a.m. It's for us who live in Europe here, we need to sleep. So it's not possible to trade 2 a.m., right? So those are mistakes that I made, but now I'm not doing that. Yeah.
I'd like to ask you, do you have any statistics about how related your average loss rate?
Yes, I have those. I have those, and I will send it to people who get into ACU money manager. Yes, of course, I need to keep the... But still, maybe statistics is good for me or not good for me, but for you it will be better because it's about trade management. I never liked that statistics in these methods, because that is why traders were always asking me, how come that you make 3,000 and I cannot make it? I was using different approach with the same system. Maybe I used trailing stop where you don't use trailing stop. Maybe I used bigger risk or lower risk. Maybe you will use another bigger. You know, it's totally different. It's a number game. So what I do is, let's say if it's 60-70% successful, maybe for you it will be 80% successful. But you will still not be making any good money. You know, it's totally number play. But if you follow the basic principles, you should have much bigger wins than losses if you follow the basic principles. But it's about you. I cannot tell you, cut your trade if you think that it will go more to the upside. I mean, you know, it's about us. That is human factor. Because every single person in this room is different. Every single person. There is no way that we will have the same statistics if we trade any systems that presented on the market. But that is why teachers should teach you how to trade. That is why I'm having session recap webinars with Admiral Markets and tell you can go long here, you can go short there. Actually, Zalan, I think, already showed those webinars to you. So I'm making you levels where to enter and exit, and you do your own trade management. That is what I do with analysis on Admiral Markets website. Every day you can read it. AdmiralMarkets.com, technical analysis, and my charts have watermark. It says analysis by Tarantula. And you'll see POC levels. POC levels are actually where you make, those are zones where you make your entries, where you can enter the market. So it can be more easier than that. Yeah. Maybe I can show that, Salan. The analysis section. But I need to... Yeah, I can show that here. But actually... Yeah, just stop sharing the screen here for a moment so I can find it here. Now I need to see... yeah, here. Okay. I will show you guys now. Just give me a couple of seconds. Here, okay. This is Chrome, I think.
Yes.
Excellent. Oh, great. Here, technical analysis on Admiral Markets website. So you go to analytics section, and here, this is my analysis. Always clear. It's in English. But if you don't know English, use Google Translator. It is easy. Just copy and paste this. This is the zone where I made a prediction. What happened on Friday? Price went there, and now it's 30 pips up. So that is where you make your entries. You see? Very easy. This is no-brainer. So this is what made our analysis nominated for the best analysis on forex3.com. And believe me, there is a lot of good analysts and a lot of good companies on Forex Street. And we have been recognized as a nominees for the award because of this pre-fact analysis. Who cares what happened? Everyone wants to know where they can make entries, where they can enter the price. So this is what I do. This is one example. Here, under technical analysis, you will have a lot of, watch DEX analysis. This was DEX analysis. Before Fed, watch this. Long analysis. 4 possible scenarios. And what happened? Price went here and then spiked to the upside as predicted. So you can always watch it here. You will have a lot of, those are usually during the day. So the analysis is usually valid during the single day because it's intraday analysis. See, hidden bullish divergence. And again, I said the price can go from this level to the upside. And everything is shown pre-fact. And usually 80-90% of the time it's respected, as I say. One more thing, education. You can also go there and, sorry, it is actually Analysis Traders blog. Here, this is where we post our blog. This is also where Chris and I write, and you can read our blogs different. It's not just this. There are funny subjects about important movies that traders should watch. So you can just translate it. Maybe it will be easier for you, but it's nice and fun to read about these things. So that is where actually what I do. Yeah. Okay, we have time for one more question. If you have one more question, then actually, and still, guys, sure, if you want, as I say again, send a mail to Zalan, open Admiral Markets, and then you will come to live class, and we will go through the system more deeper. So these were just guidelines, how the system makes pips. Go on, yeah.
So when you trade, is it pure on technical analysis, or sometimes you consider about the fundamentals and so if the central banks are coming out with announcements, or if there are like sudden data coming out, or any fundamental movements? Are you considering them, or just staying pure with technical analysis and trading?
When there is major news, such as Fed announcement, when there is major news, such as, let's say, Draghi speaking, if I'm in a trade, I tend to either close my trade or make it to break even, so I don't hold, if there is major news. But major news is those very, very important news, like CPI on CAD. that happened on Friday. So if I'm in a trade, I would tend to close my trade before the news. But if I see that the news are bad exactly for that day, then I might change my bias. If I was long on dollar CAD and I see that CAD, that I was short on dollar CAD and I see that CAD news was bad, I will switch my bias and go for a long trade opportunities based on my system. Because for intraday trading, you need to watch intraday news. For NFP, if NFP is, let's say, good, you might want to go long, let's say on dollar yen. And if you see the price dropping on dollar yen on Friday, you will use that to enter on Monday to actually for a long trade. So depending on the news, if it's intraday, then I protect my profits. But if it's like a bigger impact, like Fed, they don't want to do any hikes. When dollar CAD, let's say, shows downtrend again, I will go with the downtrend movement because Fed doesn't want a hike, and let's say CAD news is good. So I will adapt to that. You need to think about, is it intraday impact or it's a major impact? Let's say quantitative easing in Japan. You saw what happened with the yen pairs. Yen pairs suddenly move huge amounts of pips when BOJ was actually wanted. They don't like their currency is strong. They would like a weaker currency. But market was so, because yen is safe haven, market was so into buying the yen, so actually we could have traded based on that. But those are not always happening. For intraday trading, focus only on important news that have 3 dots or 3 exclamation marks for intraday news. Those that are not so important don't move the market at all. Just make some corrections, not anything else. So that was it, basically. I think that this helped you. At least you know that you can make it. But in order to make the money, you need to follow everything that I was talking about. Not just the system, but the core principle of trading. Money management, trade management, psychology of the market, when to trade, when not to trade. And then you will be able to make pips. Until then, your results will be mixed. I'm sure about it. So
thank you.
Thank you,
basically.
Also. And thank you for questions, for being here with me. Thank you.
Just one more word. We will send all those indicators and the answers. I actually answered most of the questions what we had on live broadcasting.
Okay.
But we will send all the indicators and everything what they were asking. This is just for the live broadcasting people. Okay, so basically thank you that you were here. Probably we will do more seminars and more.
I hope so.
Yeah.
Maybe in the future we will make some trading, so you will see if the price respects the levels. We might go some with live trading. We will see.
Exactly, and maybe do some roundtable talks when there are more traders.
Yeah,
actually. So next year should be. Really
everyone is different. So you will see. I might be doing some swing trading. Other trader that sits with me might be do scalping. So let's see. It will be different, and it will be fun. Definitely.
Yeah, definitely. So once again, thanks.
Thank
for
you.
Coming. And let me just put in Hungarian now, just to
sure.
closing it. Köszönjük szépen, hogy eljöttetek, reméljük, hogy jól éreztétek magatokat, és sikerült valamit tanulni is. Ha valakinek kellene az indikátorok, amiket ugye ő csinált, vagy ő hozott le őkre át, akkor küldjetek egy e-mailt az info@admiralmarkets.hu-ra, és ahogy meg lesz a csomag, amit ő küldött, akkor ezt tovább is tudom küldeni nektek. Illetve, hogyha a másik 2 rendszerre vagytok kíváncsiak, amit ugye most a második részben prezentált, és részt akartok venni az ő live webináriumokon, amikor ő kereskedik is, tehát nem a heti átfogó körkép, hanem azon kívül van, amikor kereskedik, vagy egy az egybe szeretnétek tanulni, akkor szintén küldjetek egy e-mailt erről nekem, és akkor megbeszéljük a részleteket, jó? Hát ennyit szerettünk volna elmondani. Úgyhogy mindenkinek kellemes hétvégét kívánok, még ami még hátra maradt belőle, és hogyha jönnek az e-mailek, akkor válaszolunk rá, jó? Sziasztok!